What is up, everybody? How is everybody doing today? Are we ready for the biggest, the largest, the most anticipated earnings of Zeta Global's entire existence? It is finally time. Well, not time yet. We got about 28 minutes until the numbers drop, and we're going to be covering very quickly what our predictions are again and what we expect from these earnings. We are expecting some big things. Of course, welcome back to ZEUS Weekly. I'm Ronnie, your host. This is my co-host and my main man, Nick. We are so excited. If you've been following us on X, you can feel the anticipation. You can feel the excitement with all of our posts today. I mean, it is so exciting. Now, might be building up for a big letdown. I don't think that's the case, but I think they're going to kill it, guys. I think they're going to kill it. Nick, how are you doing? How was your day, my guy?
I'm great. I'm quite impressed after those Palantir earnings yesterday. Looking forward to Zeta's results today. If you're looking at the stock price, the volume, the action, it's starting to look great. I'm anticipating a healthy beat and quite a large outperformance. It comes down to stock-based compensation. We could talk a little bit about that, Ronnie, but I'm good. I'm feeling good.
Awesome. Yeah, we're up almost 8% today. Almost 8% today. In the last 5 days, we're up 14%. But the funny thing is, it was just what? It was just back in June that we hit a high of 25.66, and we're not even back to that yet. So we've been running a lot, but we're not even where we were after, I believe that was the Palantir news that we shot up that high. And so I wanted to jump straight into what we were kind of talking about on the phone today to kind of set the stage. Why are we so excited about this earnings? Well, we have to go back to last earnings to understand the excitement. The excitement is purely around the fact that last quarter, Zeta missed. Sorry, Zeta did not come in as GAAP profitable. They didn't miss, obviously. They didn't come in GAAP profitable like a lot of people thought, and it was a disappointment. It was the only blemish on the entire earnings call. But the reason they didn't, the reason behind being net income negative and GAAP negative on EPS was simple. They acquired Marigold. They wanted to keep management team around, so they gave more stock-based compensation. So stock-based compensation that has been trending down was elevated last quarter because of this. And because of that, they weren't able to come in net income positive. They weren't able to come in GAAP positive on EPS. Why are we so excited? Well, we both believe that they're going to come in 4 to 6 cents of GAAP EPS this quarter. Just purely, that's probably our sandbag numbers. Here's what's so exciting, guys. If the Marigold stock-based compensation is no more, if there is no more stock-based compensation around the Marigold acquisition, and they continue this downward trend of stock-based compensation overall, then we're probably looking at around a 10-cent EPS print. GAAP EPS, guys, around a 10 cent. And let me remind you, analysts believe that they're going to do negative 3 cents of GAAP, non-GAAP or GAAP EPS, negative 3 cents. If the stock-based compensation around the Marigold acquisition has fallen off and last quarter was it, then I truly believe that they could print around a 10-cent GAAP EPS number, guys. And that is massive, massive. And I believe if that happens, what we saw the last 2 days, we're going to see a lot more. We're going to see a crazy move. Again, guys, a $350 billion market cap company in Palantir just ran 30% in 1 day. What do you think a sub $6 billion market cap company can do when they're literally flipping and at their inflection point and telling Wall Street, yeah, we're not just GAAP profitable, we just demolished your negative 3 cents of GAAP EPS. Let me add Davis to the floor. What's up, Davis? How you doing?
Great. Can you guys hear me?
Yep, can hear you. We're good to go.
Perfect.
Davis,
Dude,
I thought you were on a mountain.
Fantastic.
I thought you were on a mountain. What's going on?
I was supposed to be, but I wasn't sure if I was coming on. So I'm like, I'll just wait here. And it's way too hot out here in Vegas. So
How hot is
I'm
it?
just enjoying. Dude, it's 112 down in the valley, and up in the mountains is 90.
Dude.
And
It's a
so I'm
dry
just,
heat at least, right?
yeah, it is. So
Yeah.
that it's tolerable, but no, I'm enjoying life right now. Like you guys have no idea. Well, you guys have an
Why are you
idea.
enjoying
So
life? What? Because of Palantir?
uh yeah, Palantir, Zeta. I'm finally green year to date,
Let's go,
but I don't
dude.
want to celebrate
Congrats.
too soon. But I mean, my two babies are reporting Palantir and Zeta. That's all I own, really.
Yeah, Palantir demolished yesterday, and I think it was a foreshadow for Zeta today, honestly. Nick, going
I
to
hope
your
so.
thoughts about what I was just talking about with the GAAP earnings. What's I want to give you the mic, obviously, to let you give your spiel on that.
Yeah, so I'm projecting somewhere between 4 and 5 cents GAAP EPS. So I think Zeta will be GAAP profitable. And I even forecasted between 50 and $55 million worth of stock-based compensation. If Zeta does not hit the stock-based compensation levels that they achieved last quarter, and they deliver something much lower, we're talking $20 million lower, around the $30 million mark and or less, they're going to extremely outperform. And Ronnie and I were talking a little bit about this today. There is the potential for them to deliver, upwards of that 5 cent mark towards 6, 7, 8, maybe 10 cents on a GAAP basis if stock-based compensation is reeled back. I'm very curious to see what happens here. And, a wild card as well is buybacks. They have a $100 million buyback program right now. So, that stock, you got to remember last quarter when they reported, it was around $15.50, $16, and it dipped down to like $14.50 again shortly after that call. I believe we had like Claude-ish situations going on. That SaaS narrative was really sort of baking along, and it was kind of doomer, gloomy sort of sentiment in that SaaS market. So I think management really took advantage of that price and probably bought back a lot of stock. They said that overtly on the call last time around. Chris Greiner is not afraid to buy back stock. So I wouldn't be surprised to see Zeta deliver a really, truly remarkable number here in a couple of minutes.
And this is what we're talking about right here, guys. Again, here it is right in your face. They had the most stock-based compensation in one quarter, last quarter, that they've had in 2 years. And again, it was around the stock-based compensation for the management packages for Marigold and Marigold management. So they can keep them on board so they can make the transition from Marigold with Zeta Sync a lot simpler and easy. Right? Look at that. 53 million in stock-based compensation. But look what they had been doing. Right around Q1 2025 is when people started saying, or right around Q2 was like, people were like, you guys got way too much stock-based compensation. You got to really start bringing this down. And what did they do? Quarter over quarter over quarter, they kept bringing it down. And mind you, guys, look at this. 43 million is what they did Q4. They bumped it up 10 million more in dilution because, again, the Marigold acquisition. So if we look at it, right, or sorry, 42 to 53, whatever. If we look at it, Q2, 46.5, that should come down. It should come down a decent amount, especially if the stock-based compensation around Marigold has fallen off. And if that's the case, you're probably looking around a 10-cent print, whether that's 8 cents, whether that's 12 cents, I don't really know. But just the baseline, guys, them coming in with a GAAP profitable EPS is number one. Number one. Because the street's projecting negative 3 cents of EPS. Negative 3 cents of EPS is what the street is projecting. So rule number one, thing number one, let's get this 1, 2, 3 cent of EPS beat.
Yeah, I don't think it's going to be that difficult either, to be honest.
No.
Zeta has many levers they can pull to pull this off. Not to mention, right? Like, if you look at forward guidance, I laugh about this all the time because a lot of people are out there saying, "Hey, look, Zeta's giving you guidance. They're not going to grow above 20%. It's just going to be downhill fall from here." But they're not factoring in the fact that Zeta beats and raises every single quarter. They heavily sandbag. They've come out with multiple partnerships. They have Snowflake, OpenAI, Palantir. They just signed on, or they just acquired Marigold. They just released Athena. the second iteration of Athena. They just announced they're expanding their TAM, going into business intelligence. The list goes on and on and on. So if you want tailwinds, there's a list of 7-8 items that are just going to uplift the stock that management and analysts have not factored into any forward guidance. So I think there's a lot of potential here for Zeta and a lot of room and optionality for Zeta to really outperform for the next 3, 4, 5, 6 years. And I expect it, frankly.
Yeah, I mean, you got the tailwinds from the FIFA World Cup that just happened. We're going to have tailwinds around the midterm elections. They're going to get a lot of money from that, a lot of money. And then you obviously go into this next year where from here forward, they're just going to be cross-selling like crazy to those 800 and some. What I posted was it was like
I think it was
840,
870.
870 now, 870 new clients that they can now cross-sell to. And somebody in the comments was like, oh, like you don't know how hard it is to cross-sell into these different businesses and blah, blah, blah. And it's like, okay, I'm not saying they're going to get all 870. I'm not even saying they're going to get a fourth. I don't need them to get a fourth. Get a couple percent of that 870, they're going to be cooking. Because David,
I'm curious to see how easy it's going to be, though, right? David said that it's going to be a click of a button.
Yeah.
I want them to expand, quantify, like give us a little bit more color. What do you mean by that? I also, guys, to just be transparent, I expect them to announce today that migration over to Foundry is 100% complete. And they're going to announce not only maybe one, maybe two joint clients together with Palantir. I hope analysts, if Zeta doesn't dive into it, like management, give us really some more context how that integration works, what that customer experience looks like from a Palantir perspective and a Zeta perspective to cross-sell into each other's services and products. I'm really curious. Like this is a very unique partnership. I don't think it exists in any sort of form factor with any other company today. So this could be quite interesting call.
Yeah, I second what you say. Like we were talking about at the earnings preview, like them announcing upwards of 2 new clients that they nab from this Palantir partnership. Like come in with a GAAP EPS beat and then announce 1 or 2 new clients from the cross sell when everybody's like, oh, it's going to be really difficult for them to, and then they do it in literally like a month. They already nabbed 1 or 2 new clients. Guys, again, this is a sub $6 billion market cap, or right around $6 billion market cap. Again, Palantir is up how much today? Around 30%. And we're talking about a $390 billion market cap company. So yeah.
Davis is a happy man today. Let's be honest. Zeta really blows us out of water. I think Davis is going to be over here jumping out of his seat.
Dude, I'm ready to buy my company and fire so many people from my job. I'm on track. I do want to tamper some expectations though. I don't think any guidance will be I don't think they're gonna factor in any guidance to the Foundry partnership quite yet, because it will take some time for them to figure out what type of effect the partnership is gonna have. So I really think 2027 is gonna be the year for Zeta when they can start factoring all these partnerships with OpenAI, Snowflake, Palantir. But I mean, markets are forward looking, so if we come in GAAP profitable, I mean revenue grows in the 40s. I think I said I have them growing at 46% this year, and I'm with you, Nick, 4 to 5 cents GAAP EPS. If we can show these numbers, I think the market's going to be extremely happy.
I agree with you. And on that Palantir note, looking forward to 2027, I do think largely that partnership will become accretive in 2027, but you'll start to see some deals. Like, for example, this quarter, I expect at least 1. Next quarter, maybe another 1. Maybe the final quarter, you'll see 1 more deal, maybe 2. So somewhere between 1 and 5 joint customers by the end of the year, or joint clients by the end of the year. I think that's entirely feasible. But we do understand where their sort of long-term or short-term goal is for a floor per year, which Chris Greiner came out and said they expect $100 million a year from this partnership, which is, you know, quite impressive. That's an extra $100 million Zeta doesn't have to their top line right now, which can help them continue to outperform for the years to come. And also another variable analysts and management aren't factoring into any forward-looking guidance. So moving into 2027, I do expect them to report a year early their 2028 guide and beat that, just like they did in 2024 for their 2025 guide. Or sorry, yeah, the other way around. But yeah, I'm looking forward to this quarter. I think it's going to be pretty good. I think a lot of us are going to be surprised.
Agreed. Sorry, I'm just putting together this poll. Davis, we'll get into me and
Yes.
Nick's projections real quick here. What is your projections? Everybody should already know me and Nick's projections if you've been following along. Do you have projections, or
It's
do
got
you
some
have?
vibes.
Dude, I usually leave that stuff to you guys. I kind of just throw out random numbers, and I was almost spot on with Palantir. But like I said, I think 46% revenue growth. I was 4 to 5. I said 4.5 cents GAAP EPS. I think what would that be? 460 million in revenue this year. I mean, those are my numbers. Like I said, I just want to see GAAP profitability. I want them to say that they're going to sustain that. No more one quarter profitable, next quarter not. I just want to see it sustained. I mean, I made a post. I said, I'm at the point now where my conviction is so strong in this company that I've kind of stopped researching and stopped crunching the numbers as hard. The same thing with Palantir. It's just like I know they're gonna outperform. I know they're gonna beat and raise. So I'm kind of just along for the ride. And it's like I have people like you and Nick that do all the dirty work, and I kind of just ride on the coattails. So thank you guys for that.
I had my old Air Force buddy hit me up today, and he was literally like, "Dude, you make my life so easy."
Exactly.
And I'm like, "Well, all right, cool. I like it." Yeah. So I mean, again, I think a lot of people don't understand that it really is around, because they have such a predictable business model. It really is around that Marigold acquisition and the stock-based compensation. Honestly, a lot of it is around that. So if that's not over and we saw more of that this quarter, then they might squeak out a 1 to 3 cent. If it is over, then you're probably looking upwards of 5 cents of GAAP EPS beat. And then, yeah, I really like what you say, temper expectations, guys, just straight up with everybody. If they come in and it's a negative GAAP EPS, the stock will tank. Like, just so you know, like, the stock will tank. Does a negative GAAP EPS this quarter affect my conviction, affect these guys' convictions? Probably not. Affect the long-term bullishness of this company? Definitely not. So if you're here and you're like, if they do miss, I don't think they will, but if they do, again, I'll be buying. But again, I don't think that's going to happen. But I want to put it out there, right? We definitely need to put it out there. Like, what could go wrong here? They've ran into earnings. They've ran up into earnings. If they miss, not miss, but I don't think they're going to miss. If they print if analysts expect a negative 3 cents of GAAP EPS and they come in like negative 0.1 cent and they're still negative GAAP EPS, then the stock's probably going to go back to 18 to 21 range.
So Ronnie, remind me what your revenue target was again. What did you
yes, so let me pull that up. I was actually looking for yours. 1 second. There we go. I actually went super conservative. I actually regret my my estimates, but I expect 3 cents of EPS, GAAP EPS. But again, like I said, if that Marigold acquisition stock-based compensation falls off, then I can not easily, but I could definitely see around 10% or 10 cents. 437.41 million. It's right around a 4 to 5% beat. And then I expect them. So their guidance is 2 to 4 cents of GAAP EPS this year. I fully expect them to raise that to 4 to 6 cents. And then I expect them to go from revenue midpoint of 1.785 to 1.792, which is the current high of their guidance for this year. Nick, I'll try to pull up yours here in a minute. Should be on your X, right? But let's go to your
Yeah, it is.
Substack.
I just sent it to you. I just sent you my the
Okay.
X post with some of my stuff. So essentially, what I'm guiding for in revenue is 443 million, which is roughly 44% year-over-year growth, and only a 5.5% beat of management's guidance. So if you want to know what Wall Street's guiding, Wall Street is essentially guiding the exact same thing as management. Management sandbags, beats, and raises every single quarter. So the fact that Wall Street is guiding literally, I think, within 600,000 of management, I think is quite ridiculous. I think a 5.5% beat is quite easy for Zeta to do. There's a lot of people out there who expect something much larger, closer to 50%. Hey, that's entirely possible. I'm just being a little conservative. On the GAAP EPS side, earnings, I think Zeta will deliver somewhere, like I said, somewhere between 4 and 5 cents. We'll have to wait and see what that looks like. It could be a little bit more, could be a little bit less. Like Ronnie said, expect the stock to tank if they do not, post a GAAP profitable quarter. But honestly, I don't see how they achieve their full year GAAP profitability if they do not print a GAAP profitable quarter this quarter. Honestly, it's going to be quite difficult. They're going to have to really outperform in the second half of the year. Realistically, I expect them to print GAAP profitable quarter, as you see. And I think they may raise that full year target for GAAP EPS somewhere to 4 to 6 cents, perhaps, or even 3 to 5 cents range. Because at the moment, it's 2 to 4 cent range. I definitely think they're going to raise that a little bit, at least raise that bottom upwards. So, to be honest, it's already a 2 cent gap. So it's probably going to have to go to 4 to 6 cents. I think that's realistic. At the moment, full year guidance, I'm guiding for or projecting, I think it was 6 cents EPS. I think that's realistic. And again, a little bit of conservatism baked into that.
Yeah, like you just said, it really, for a company that sandbags like they do, for a company that's going, what I believe is going to report today in just a few minutes, their 20th beat and raise quarter. Like, this is a company that, like, you don't have to worry about. Like, people are getting all up in on the price action and blah, blah, blah. But I'm just sitting here like, dude, they're going for their 20th straight beat and raise quarter. Their business is so predictable. Then they're partnering with these Goliaths like OpenAI for the generative engine optimization. And then they're partnering with Palantir, 7-year contract. And now they can cross sell into 870 enterprise clients. I mean, guys, I keep saying this. The business just today, just based on what they're doing today, is severely undervalued. They should be trading somewhere around a 6 times price to sales. If you look at a discounted cash flow, whatever way you cut it, EPS, DCF, rule of 40, PET, whatever, like, I believe they should be trading around a $40 price tag. And they're currently like, 24 right now, I believe. 24.42. So anyway, you slice it based on the projections on what they're doing right now, not what they're going to continue to do, not with growing margins, not with growing EPS, not with growing GAAP EPS, GAAP net income. Guys, any way you cut it, it looks really, really good.
We got 5 minutes.
5 minutes, yeah. So I'll be looking on. Oh, another thing. I didn't know this, but like the short interest and short float isn't crazy high, but it's not crazy low either. We're talking about around a 14% short float and around a 15% short interest. I don't know if they covered today, but if Zeta does what I think they're going to do in this earnings, then this could be a lot of pressure to send the stock even higher, guys. So there's just a lot of things. Like, Zeta's been cooking. It's been cooking for a while now. We all know that. Like, it's up around 19% year to date. It's been in this consolidation for a while. It's been building this base for a while. When it goes, it's gonna go. And the people that have covered calls, like for this little bit of premium or whatever, they're gonna regret it. Eventually, the people selling covered calls are gonna regret it, because when it goes, it's not coming back. I always compare it to Oscar Health. Everybody was like, Oscar Health's never going to do anything. It's never going to go. And then it finally went. They sent it down to 10, 11, and then they ripped it to over $30. And now, like, I feel like there's no retail really left in the name. It's all just institution at this point. But nevertheless, yeah, there's a lot of things to be bullish about here, guys. Really excited for earnings. Yeah, I think 20th straight beat and raise quarter.
Yeah, I'm quite excited to hear management's commentary on a couple things. Right, I want to hear what they have to say about the business intelligence vector, what they need or don't need as for an acquisition, what that $1 billion essentially line of credit is going to be used for. Is it largely going to be stock-based, share repurchases, or is it going to be an acquisition? I don't know. Zeta's going to keep some optionality there, which is kind of what they highlighted in that report, or that press release. I'm wanting to hear a little bit more color from management on that. And then, obviously, I think the elephant in the room, kind of two things: OpenAI, Palantir. What's the situation report? Progress? What's going on? I want information. Give it to me, please. I want to know. Looking forward to that. So, jot notes. Anybody who's watching, anybody's listening. Number one, business intelligence, AthenaOS, if there's any commentary there. Another one, what they're going to do with that line of credit, $1 billion. And then finally, OpenAI, Palantir. Those are the four main things I kind of want to hear about. I'm sure management's going to talk about it in quite some detail. So we're about to get our results here in about 2 minutes. Davis, anything to add?
Not really. I mean, we're kind of the same. That's basically what I want to hear. More so the business intelligence, because I don't feel like they've given us a lot about that yet. I don't know. I just want them to prove that they are a software company that actually can return value to the customers. I think that's what Palantir has been doing for years now. And Zeta's been doing the same thing. I mean, we hear David always say 600 to 700% return. Eventually it'll be 1,000. But I would love it if he came out and said, we're going to 700 to 800% right now. Just show us that you actually are returning value to your customers. I want him to prove. I really want to ask him. I'm like, okay, we know that Zeta is an amazing company, but how are you going to take this company and monopolize the sectors that you're in? Like where no other company looks at a trade desk or a different company that's in the same sector. They're like, no, we want to default to Zeta and Zeta only. Like that's where I want to see this company going. So I'm hoping that they shed some light on that, and I believe they will. I just think it'll take some time. They're doing all the right things. They're growing. They're expanding their partnerships. So we'll see. And I think this quarter is really going to be that inflection point to profitability, to monopolizing their sector. And so I'm really excited. I'm not nervous, but we'll see.
Davis is saying that there's a lot of people calling Zeta smoke and mirrors. So let's see the numbers. Let's see it back it up so we can shut these haters up and shut the bears up. Is basically what I just heard. All right, it is 4. I'm slamming the refresh button, looking for these earnings. As soon as we get them, we will bring them on screen and we will talk about them. For right now, I'll give you guys the chart so you guys can see what it's doing, so we can all freak out as it goes up and down, and usually the first move is the wrong move. Also, thanks Mopar for the $5. I'm here. LFG left my pregnant wife in the emergency room. Wouldn't miss this for anything. Hey, you got to do what you got to do, okay? You got to do what you got to do. Nick's over here taking pointers. Nick, imagine that the next earnings is when she's due.
When she's due? Yeah, it's going to be damn close, I tell you that. She's due in November.
Oh, man. Crazy, crazy. All right. Nothing yet. Nothing yet. I'm really excited, guys. I'm really excited.
Nate just texted me. He said, wait, when is Zeta earnings?
He's in Switzerland, this guy. He's sold out of all of his shares. Every single share. That the rumor has it. I'm not confirming or denying that. I just it's what I heard.
Neither confirm or deny. Oh man. Let's see.
It's usually 5 minutes after.
Yeah.
Yeah.
I always wonder how certain people get it so fast. Like before it even hits the dang
It's
like
my Trump API, man.
investor.
Trump API
Yeah,
to
yeah.
say.
Your 100K Trump API. I don't know. I'm on earnings correspondent. That guy's super quick. That guy's super quick with it. All right. So before final guesses, you only get one number. Round robin. Nick. GAAP EPS. What is it?
5 cents.
Davis.
4.5.
I'm going with 7. 7 cents. We're playing prices right here. If you're over, you lose. Everybody in the chat, do me a favor, hit the like button. Make sure you follow Davis and Nick and myself. And also drop in the comments right now what you think the GAAP EPS is going to be. Whether it's -3 cents, like the analysts think, whether it's 0 cents, whether it's 1, whatever it is. Drop in the comments right now what you think it is. Whoever gets it right first, I'll actually give a free membership into the vesting community on me. How about that? There you go. All right, nothing yet. That way we can make it fun. Everybody can play a game. Nothing.
Yeah, I'm spamming this thing, man.
Yeah,
Sorry,
you're
guys.
probably right. It's probably at 405, but I don't care. I'm gonna keep spamming.
When you do get it, Ronnie, pull up that presentation. Curious to see some of these results. Specifically, sorry guys, specifically scaled customers. Or super scaled customers. That's what we want to see. Those are Zeta's top spenders above $1 million.
Yep.
Soon they're gonna have to raise that to above $5 or above $10 million, just because these customers are spending so much money. In due time.
And if my mic gets really loud because I scream like a little girl, if this thing just rockets, I'm sorry in advance. If I also get really silent and depressed because something goes wrong, I'm sorry in advance.
What's the price action looking like, Ronnie?
It's up on the screen. It's just nothing. Literally nothing. It just flashed negative to positive. Oh my gosh, SpaceX smashed. But there's no negative.
Did they?
Negative gap.
We're up 4.
We're jumping 4%.
Okay.
I don't like
Somebody's
that.
got
Usually
access.
first move's the wrong move. I don't know. Where's it at? Come on, 405.
Somebody has Bloomberg terminal.
Dude, legit. Arista, SpaceX. Come on, where's it at? Now we're 5% in after hours.
I would love to see us just hold above 25. It's been such a battle.
Yeah, 25 is such a...
It's out. It's out. Holy smokes.
Where?
I was spot on. 443 million. I was spot on.
Where's it at?
It's out on their
Insider
page.
right here.
It's on their page right now. 443 million, 44% year over year. So it's roughly a 5.5% beat. They just hit a scaled customer count of 197. Holy smokes. What is that? 197. That's a lot. I think they had 181 last time. Oh, no. So, yeah, that's an increase of 17% year over year. Wow. Okay. This is good.
I see it. I have it pulled up.
Good.
Oh, they did
Let's see
21 cents
earnings.
of EPS, non-GAAP EPS versus 19 cents. Yeah, 442 million, 0.766 over 42. So beat by 11%.
That's 3
5%.
cents. That's
3 cents?
Yeah, that's 3 cents.
So I was dead on.
Yeah, that's 3 cents. That's great. That's great. That's really good. That's 1 cent below my bottom range, That's still good. That's still good.
Yeah, analysts expected negative 3 cents and they did 3 cents.
Yep.
So
Yeah.
complete opposite of what analysts believe. So that's really solid. Let's see. Is the presentation out? Probably not. Yes, it is. Let's see. Am I sharing this? Yes, I am. All right.
This is a great quarter, guys. This is really good. This is
All right.
impressive.
20th straight beat and raise quarter and achieved rule of 64 and rule of 49, excluding M&A. 2Q26 total revenue growth of 44%. 44%, guys. Last quarter was 50%. This is 44%. And 28% revenue growth, excluding M&A. Free cash flow of 58 million, 13.1% free cash flow margins. That's down a little bit from last quarter of 13.9%. 73% year over year. 8 of the top 10 verticals grew greater than 20%. Trailing 12-month, consumer and retail, financial services, automotive, healthcare, all accelerating from 1Q. Super scaled customers growth of 17%. That's big.
That's big.
And ARPU growth of 17% year over year, both ahead of 2028 model. Strong customer adoption across the platform and double-digit growth across all 3 use cases. Customers using more than one use case up 90% year over year. Customers using 5+ channels up 50% year over year. And cross-sell and upsell deals won in the quarter up 43% year over the year. Cross-sell and upsell deals, that means we might have a new deal through Palantir, like we expected. Increasing Zeta 2026 guidance for revenue, adjusted EBITDA, free cash flow, and GAAP EPS. No. 9 to 11 cents of GAAP EPS for the full year, dude. Wow. Guys, it was 2 to 4 cents GAAP EPS for the year, and they just upped it to 9 to 11 cents. That is massive. That beats mine. I expected 4 to 6 cents raise. Wow, dude. Wow. 39% revenue growth for the whole year now. They're expecting, and 63% cash flow. Guys, yeah, of course the stock's down 5% because it ran into earnings. That's massive. That is massive. These are massive numbers.
That's crazy.
Dude.
Remarkable.
Wow. Wow. All right. Let's see. Dude, they're up to 197 super scale customers. 197. That's the most they've added over a quarter since back in what? Early 2025. Let's see. This is still the same for the ARPU. Let's see. Still serving 51% of the Fortune 100. 2028 numbers are the same as of right now.
So midpoint guidance for next quarter is 40% year-over-year growth.
Yeah, I got it right here.
71 million. Yeah, they're going to come in and they're going to beat that again.
Yep.
They're going to beat that again.
So they did 50% last quarter. They did 44% this quarter. They probably do between 40 and probably like 41, 42% next quarter.
Going to be bigger. It's going to be bigger. It's going
to be bigger.
Yeah. Want to know why? Let me verify.
I'm just thinking because like over the year they usually tend down, but why?
Okay, so the reason why, political spend. And they sandbag political spend ridiculously. So I think they come in Q3, Q4, political spend outperforms dramatically. It is tremendous upside. So this quarter, Marigold revenue actually came in close to what I expected at 48.1 million. So that beats their guide of roughly 1 million. And organic revenue was actually, it was pretty good actually. It's 28% year over year growth. That's 1% less than the prior quarter. In Q1, they really outperformed. Okay. Wow. Yeah, that's pretty good. Q4, they're actually giving us some guidance for Q4. Oh, wow.
Did they? Did I miss
Yeah.
that?
Yeah. Q4, they gave us guidance of
Oh, yeah.
29% year-over-year growth. Interesting.
So 39% for the year. That still allows them to beat these, obviously, and hit over 40% revenue growth for the year.
Yep. Now, I'm curious, where does that land, that updated guidance? Let me check. Where does that land against my guide? Let me take a look here, guys.
Have they changed that? 199 million revenue for the year for Marigold. I don't think they've changed that.
I think they did. Wait, let me check that. Sorry, what did you say again, Ronnie?
The Marigold. No, I'm just checking something real quick. Have it. Where is it at? Here it is. Okay, Marigold 198 million for the year, and they bumped it up to 199.
So $1 million.
Yeah.
Interesting. I still think they're going to outperform.
Yeah.
This is good. How's the stock reacting? Wow, down 13%. That's crazy. Wonder why.
Because people don't get it. I mean,
I think people are trading the stock like crazy. I think that's what's going on right now.
yeah. I mean, whatever, dude. Like, again, they just smashed and they came in with GAAP EPS.
Yeah, just wait until they get on the call here, guys. The sentiment could change completely on the call.
Oh,
Completely.
100%.
Yeah.
Actually, while I'm
actually
at
really
it,
surprised.
I'm going to buy more now. Because I did this last time and then it rocketed. Dude, these are massive numbers. Guys, my favorite part, Nick, my favorite part right now, the fact that they upgraded their yearly EPS guide.
Yeah.
That is so big. Like, where is it at? I think I missed it completely. It's up here. To go from, hey, we're only going to do 2 to 4 cents of GAAP EPS to now we're going to do 9 to 11 cents. And again, they sandbag, guys. They sandbag. They just told us last quarter they were only going to do 2 to 4 cents. Now they're sandbagging and saying they're only going to do 9 to 11 cents. That probably means they land closer to 20 cents than to 10 cents for the whole year. That's huge. That's huge. This is the biggest part right here. That is the biggest part. And the fact that they just did their 20 straight beat and raise quarter and they did 3 cents of EPS gap. Usually when stocks run up into earnings, they could sell off. But make no mistake, they just rocked this earnings. Rocked it. Where's that stock-based compensation? I want to see where that came in. Sorry about the fast movement here.
It's more or less flat. I think I saw it at 50, 51. Really? You can pull it up.
50 to 51? Wow. So there might still be Marigold acquisition or Marigold stock-based compensation in there because that's high.
That is high. That is
but
high.
they still did 3
that
cents of EPS, which is huge. That tells you how great they're doing. Still got the 6 times ROAS. Let's see. All this stuff's the same. They did GAAP net income of 8.2 million or 1.8% of revenue, including 52.1 million of stock-based compensation, guys. That is huge. They just came in and rocked it on net income and GAAP EPS, and they still did a high stock-based compensation. Because literally, where are we at? Quarterly. They did 53 million last quarter. This quarter, they just did 52.1. I find it hard to believe that there's not still stock-based compensation, around the Marigold acquisition.
Yeah, it's highly probable that they still have something lingering on.
It has to be.
That deal, if you remember, they signed. Or sorry, I keep saying signed. I don't know why. I think I read something. It was some sort of sports something I read article today. I keep having that connotation stuck in my brain. So they acquired Marigold for, I believe, 100 million, but the deal could go up to 350 million. There's a couple stipulations related to that, and I think that 350 million was quantified through stock-based compensation. So I'm not too
I
sure
found in the
what could be
footnotes
happening.
last time.
Yeah, maybe look into that. Read out those footnotes for us.
Real quick, just because I saw it. If you're bearish about this, you're absolutely high and off your rocker. We're talking about going from negative 12.814 million to 8 million in positive revenue or positive net income year over year. Negative 4 cents in margins net income to almost 2%. And they did more stock-based compensation.
I still don't know why the street's selling this thing off. This is so weird. I can't help but think it's some sort of trading or something going on here.
Whatever. I don't really care because this is like this. They just did more stock-based compensation. And Nick, what were we just saying? We were literally just saying they can only come in and do really well in the GAAP profitability if they didn't do as much stock-based compensation, but they did a lot still, and they still came in and crushed it on GAAP and net income and EPS. And I'm not trying to start that whole thing with people because I know people are really, like a lot of people don't like the stock-based compensation, but I lean probably like 80% positive that it is probably still around the Marigold acquisition. Marigold.
Wait a second. No, I read that wrong.
Yeah, there's nothing in the footnotes or anything about the Marigold. Because this is where I found it last time. If we go back to last quarters. No, where did I find it last time?
Somebody's saying that we got the Reddit treatment. That's hilarious. Yeah, except Reddit sold off because the DAU is declining. And that's not, to me, that wasn't a really rational argument. I mean, you could kind of say, hey, DAU selling off, the stock isn't doing, or the company's not doing great, there's a downturn, whatever. If you actually look at seasonality, Reddit was great. You have to anticipate some DAU decline in numbers due to seasonality, especially in the summer. But as it pertains to Zeta, I still don't know. I don't know why the street is selling this off. It's so weird. It's very, very odd. So, Ronnie, Davis, you guys see any smoking gun?
I don't. The only blemish is that stock-based compensation is higher, but again, they literally came in and crushed GAAP EPS, GAAP net income. They did 40-some% revenue growth. So I mean, like again, I lean towards that. And I remember I told you this last quarter, Nick. I was like, either this is the last quarter for this stock-based compensation and it'll fall off for the Marigold acquisition, or we're gonna have one more quarter of that. Nick, why do I believe that? Because what they just said. They literally just told us what? They literally just said that they're not going to do 2 to 4 cents of EPS. They're not going to do 9 to 11 cents of EPS gap this year. They're more likely going to probably do between 14 and 20 cents of EPS this year. Gap.
Yeah.
How could they be guiding
probable.
that if this 3 cents, what does this 3 cents put them at? Let's look at it. Let's go to the charts. Let's go to EPS quarterly. So they did 3 cents, negative 6 cents. They're literally at break even, guys. They're at break even trailing 12 month. They're at 0 cents on the year, GAAP EPS. And they just told us that they're going to do 9 to 11 cents this year. And they sandbag. It's Q2. So that means the next 2 quarters, they have to come in and do around 5 cents each quarter of GAAP EPS. And guess what? Historically, in Q3 and Q4, well, actually Q3, Q4, they actually do better. They do better across the year. So it kind of aligns. But again, they did negative 5 cents of EPS last year. Analysts were expecting negative 3 cents of GAAP EPS, and they just did 3 cents positive GAAP EPS in their second worst quarter of the year. Pretty good. Pretty good. Again, sometimes it could just be the stock runs up into earnings and then I don't know. People are expecting a little bit more, which I think this
Yeah, I
is
think it's odd.
What do you grade this? I grade this an A+ quarter.
Yeah,
I mean,
I think
don't
this.
like
I think this is a great quarter. I got to peel back
maybe
the
an A-,
balance sheet if you look at
literally
it.
just around the stock-based compensation. But if it comes out that it's literally around the Marigold stuff, then what are we talking about? Because that's already
Yeah.
a necessity. And then it literally will fall off after this quarter. Davis, what do you think?
I don't know. I just think it's the typical ebbs and flows of the market. You have a lot of traders in this name. Not many people actually study the company and see the long-term vision. They see it online as a just the next hype name. But I mean, these numbers, they keep outperforming even our best expectations. And I keep saying this. I really think 2027 is the year for Zeta. I think it's just going to be choppy. We're going to be stuck in the range of 20 to 25 for the rest of this year. But then when they come in and probably beat that 9 to 11 cents, it's just going to be undeniable that the company's here. They're here to stay. They are the dominant player. And I'm not worried about it. Like you just bought more shares and this it's a gift. It's the year to just keep accumulating. Like I haven't been in the markets long, probably like 5 or 6 years, but my conviction in this company is so high that I don't care if the stock drops 10% if they're doing everything correct. And so I see nothing wrong with it. I'm sure management will give us some commentary and clarity on what's going on, but I see nothing wrong. Like, do I want to see a red? Not really. But I mean, heck, 22 is a lot better than what 14 or 15 where it was just a month ago. So I'm really happy. I no complaints on my end.
Love it. Love it. Yeah, I mean it's about the fundamentals, and eventually the fundamentals do matter. Yeah. And again, guys, this is negative 9%. We don't know we don't know what they have in store for us on this earnings call. If they announce that they got 1 to 2 partnership new enterprise clients from Palantir, that would be massive. They get more commentary around the business intelligence and what they're going to do there. Massive. So far, definitely the biggest thing is upping the 2 to 4 cents of GAAP EPS for the whole year to 9 to 11 cents. Because they're doing that in the second quarter, guys. So I suspect that next quarter, they're going to up it again. Steinberg said they had 2 announcements. Harrison said. Okay. Okay. Guys, if you're a true long-term investor and you like this company and you have the conviction that me, Davis, and Nick here have, like, I'm not going to tell you what to do, but I'm buying the dip. Even though the dip's only back to 22, I don't care. The earnings just confirmed what I was thinking. The earnings just came in and even did better than what I thought they would. If the company's getting better, you should buy more, right? Ask yourself that. If the company's getting better that I have all this conviction in, I should buy more, right? That's for you to decide. But for me, it's a yes. So, yeah. Are we launching higher? No. But it is what it is, man. Like, you can't control other people and their emotions and what they're going to do with the stock. And again, I've seen it where they've sold off Zeta after earnings, and then the next few days it starts ripping. So
too many people tied it to Palantir earnings when the companies are just completely different. Like, yes, they just partnered. Yes, they have some similarities, but at the end of the day, they are different companies. And so I think too many people were expecting a huge 20-30% pop and they didn't get it. And they're like, oh crap, let me get out of this because it's not doing what Palantir did.
True.
I may have found something interesting.
Uh-oh.
No, very good. I don't want to say it because I want management to confirm it.
Bro,
Is
if you
it
say
around
it, then they
is it
confirm
around
it.
a new partnership?
Mm-hmm.
Yeah.
Mm-hmm.
Okay, nice. Let's get it.
Okay.
We should be going live here in a minute or so.
I'm sure management's going to say, I'm going to hold off for now because I'm sure management is going to say it. If this is true, this is pretty wild. I never heard of anything like this before.
Interesting. David posted on X.
What did David say?
Let's see. I'm trying to make sure I don't miss the earnings. We just announced our Q2 results and we crushed the quarter. Our performance reflects strong execution and momentum as an intelligent AI infrastructure company. Our 20th straight beat and raise quarter. You guys can read all that. I don't have to read that. Very few AI companies are growing free cash flow faster than revenue. Thank you to our customers, partners, for continuing to grow with us. As Zeta Global has become the intelligent AI infrastructure layer for enterprise decision-making, I'm more confident than ever before in the opportunity ahead, and as always, incredibly proud of Team Zeta. Love it. Oh, here we go. We're live.
It's live? Okay.
Yep. Hold on. I'm going. Hold on.
Along with other information
There we go.
about Zeta. Joining me on the call
Everybody
today
hear
are
it?
David Steinberg,
Good.
Zeta's co-founder, chairman, and chief executive officer, and Chris Greiner, Zeta's chief financial officer. Before we begin, I'd like to remind everyone that statements made on this call, as well as in the presentation and earnings release, contain forward-looking statements regarding our financial outlook, business plans and objectives, and other future events and developments, including statements about the market potential of our products, potential competition, revenues of our products, and our goals and strategies. These statements are subject to risks and uncertainties that may cause actual results to differ materially from those projected. These risks and uncertainties include those described in the company's earnings release and other filings with the SEC and speak only as of today's date. In addition, our discussion today will include references to certain supplemental non-GAAP financial measures, which should be considered in addition to and not as a substitute for our GAAP results. We use these non-GAAP measures in managing our business and believe they provide useful information for our investors. Reconciliations of the non-GAAP measures to the corresponding GAAP measures, where appropriate, can be found in the earnings presentation available on our website, as well as our earnings release and other filings with the SEC. With that, I'll now turn the call over to David.
Thank you, Trey, and welcome to the team. We are very excited to have you. Good afternoon, everyone, and thank you for joining us today. I will start with the headline. We delivered our 20th consecutive beat and raise quarter, delivering the rule of 64 as a company and the rule of 49 excluding M&A. And in the second quarter, our year-over-year revenue growth accelerated to 44%, up from 35% in the second quarter of last year. This is the result of Zeta increasingly becoming the system of intelligence for our customers. The second quarter performance once again shows this strategy is working. Second quarter revenue was $443 million, representing year-over-year growth of 44%. That's up 28% year-over-year, excluding M&A revenue. Adjusted EBITDA was $92 million, up 56% year-over-year, with margin expanding 170 basis points year-over-year to 20.7%. And based upon this strength, we are once again raising the midpoint of our 2026 revenue guidance by $33 million. 20 consecutive beat and raise quarters reflects more than just strong execution. It is evidence of growing and durable demand for our platform that turns data into intelligence, intelligence into decisions, and decisions into measurable outcomes. Investors have historically viewed Zeta as a market technology company. Marketing is where our platform was first applied and where we built our leadership position. But that description no longer fully encapsulates who we are today. Zeta has evolved into an intelligent AI infrastructure platform. Marketing is our first application, not our limit. Our platform combines proprietary data, AI, workflow automation, and activation into a single operating system that helps enterprises make better real-time decisions and take action. The foundation is our data cloud, built on proprietary data covering more than 535 million individuals globally, trillions of signals, and 20 years of model tuning. And to be clear, this data is owned, not rented, because nothing you rent can be a moat around your business. Athena serves as the intelligence layer, allowing customers to interact with that foundation using natural language and embed AI directly into their everyday workflows. It truly allows customers to focus on outcomes versus navigating the platform. Our activation platform then turns those insights into actions across channels while continuously learning and getting smarter via the results. This has contributed to the strength of our net revenue retention. And with Zeta Business Intelligence, aka ZBI, we are also extending beyond helping enterprises to acquire, grow, and retain customers to a fourth use case, enabling organizations to transform business and customer data into intelligence, insights, and real-time actions. To be clear, this is not static dashboards or old-school business intelligence used to explain what happened. ZBI helps predict what happens next and acts on it in real time. A major sports and entertainment company uses ZBI today to understand its fans, share of entertainment spending, and engagement across live events and streaming. This helps quantify the value of current distribution partnerships, identify the most attractive future streaming relationships, and strengthen its negotiations at renewal. A leading energy drink brand uses ZBI to quantify the incremental value it drives for retail partners, including customer growth, spending, and long-term value. This helps demonstrate the brand's impact at retailers and identify opportunities to deepen distribution and partnership investment. Taken together, these capabilities position us as the intelligent AI infrastructure layer that sits at the center of enterprise decision-making. This transformation has been accelerated by 4 strategic catalysts. First is our OpenAI partnership. Our collaboration with OpenAI validates the AI strategy we have been building for years, enhances Athena's capabilities, and creates new commercial opportunities. As foundation models continue to improve and become more widely available, we believe the durable advantage will come from what's built around them: proprietary data, governance, workflows, and decisioning systems that turn intelligence into outcomes. Those decisioning systems are our own inference models, smaller, purpose-built models that we have been training on the data cloud since 2017. OpenAI powers Athena's voice. The decisions run on our models, and no large language models ever touch the data in our data cloud. The second is Athena. Launched earlier this year, Athena is fundamentally changing how customers interact with the Zeta platform. Athena is true voice enablement and fully conversational. Instead of navigating dashboards or conducting manual analysis, customers can simply ask for outcomes. The platform knows their business, decides, acts, and learns from every single result. That dramatically lowers the barrier to adoption and expands use across teams, channels, and use cases. We have seen that users who interact with Athena through voice exemplify this rapid adoption. Over the last 60 days, Athena's voice users are interacting with the platform at a 500% higher level than non-Athena users. We are also realizing the benefits of AI within Zeta. In the second quarter, 90% of our new code generated was automated, helping our teams to innovate faster and continuously enhance the platform for our customers. The third is Snowflake. We deepened our existing partnership with Snowflake, and we now have over 100 shared customers, reinforcing Zeta's role in the enterprise data ecosystem, where customers increasingly want to connect data environments with intelligence and activation. Zeta is uniquely positioned not only to help customers store and analyze data, but to act on it. And the fourth is Palantir. Our partnership with Palantir significantly expands Zeta's enterprise opportunity. Palantir provides the oncology, governance, and enterprise AI infrastructure that large organizations require. Zeta contributes proprietary customer intelligence, proprietary data, identity, decisioning, and activation. And we have reached 2 important milestones in this partnership already. Our data cloud was fully integrated with Foundry as of July 31st, and we have already received multiple agreements for our initial combined sale, with several other meaningful opportunities in flight. Together, these 4 catalysts are accelerating Zeta's transformation and strengthening our position as the intelligent AI infrastructure layer for the enterprise. We believe the defining characteristic of an infrastructure platform is not just innovative technology. It is a platform that becomes more valuable the more customers use it. Every decision it powers makes the next one better. And because those decisions run on our own inference models, not rented tokens, we make millions of them a day at infrastructure economics. That is the flywheel driving our results. And we're seeing it play out across our existing customer base. A leading telecommunications provider recently expanded its relationship with Zeta into real-time personalization, adding grow and retain use cases to its existing footprint. It is a powerful example of our land and expand model. Start with one use case, prove value, and expand across the customer lifecycle. Athena is beginning to accelerate that dynamic. To give investors greater visibility into its impact, Chris will provide more detail on our initial framework for measuring key metrics like revenue contribution, adoption, and usage later in this call. We'll continue to expand on our reporting around these metrics in the back half of this year. GAAP is a powerful example of our platform evolution. As part of its broader AI-led transformation, GAAP selected Zeta to help architect its next-generation marketing stack, with Athena at the center of how customer data, decisions, and execution come together. Our role extends well beyond powering individual campaigns. We are helping GAAP to remove silos, unify decision-making across its iconic brands, and build a more intelligent marketing engine that learns, adapts, and acts in real time under a multi-year agreement as GAP's system of record. That is what it means for Zeta to become the transformation agent for the enterprise. This momentum was also evident at Cannes Lions, which served as an important proof point for the growing market interest in Zeta and Athena. We launched Athena for agencies, hosted more than 115 executive meetings, and delivered 37 live Athena demonstrations, resulting in a record sales pipeline coming out of the event. The conversations we began in Cannes will continue at Zeta Live, where we will provide an even deeper look at the future of Zeta and intelligent AI infrastructure. Zeta Live will be in New York City on October 8th. I'm excited to announce we already have two incredible headline speakers, Olympic gold medalist, entrepreneur, and founder, Lindsey Vonn, and entrepreneur and global superstar, Kevin Hart. Zeta Live has always been our opportunity to show customers, partners, and investors where we are going next. This year, we expect to introduce the next generation of Athena, continuing the extension of Athena as a super intelligent agent, answering questions, empowering workflows to a system of intelligence that knows, decides, acts, and learns. The opportunity in front of us is no longer just about modernizing marketing. It's about helping enterprises turn fragmented data into intelligence, intelligence into decisions, and decisions into measurable growth and cost savings in their businesses. The past year has been an inflection point for Zeta, bringing together capabilities and investments we have been building for years. Yet, we are still in the very early stages of this opportunity. AI is changing how enterprises operate, how software is consumed, and what businesses expect from their technology platforms. For Zeta, that creates an opportunity to expand our role from helping customers execute marketing programs to becoming the intelligence layer that enables them to move faster, make smarter decisions, and drive better outcomes across the enterprise. We continue to be the disruptor in this new ecosystem. As always, I want to thank our customers, partners, and shareholders for their continued support. And to Team Zeta, thank you for your hard work, your commitment, and belief in what we are building together. Now let me turn it over to Chris to discuss our results in greater detail. Chris?
Thank you, David. I'll echo by welcoming Trey to the team. As we announced last week, Trey is perfectly suited to help lead Zeta's evolution into an intelligent AI infrastructure company. And I'm thrilled to see Matt Foss step up to lead FP&A for Zeta. In my conversations with investors, one thing is clear. A new framework for investing in companies is emerging. Investors are prioritizing their time with companies gaining share and delivering durable, predictable growth. They're increasingly screening for companies generating free cash flow and positive GAAP earnings. And they're ultimately backing companies with defensible AI moats proven by results. Zeta embodies each of these characteristics, and the second quarter's results make this evident. Q2 was our 21st straight quarter of greater than 20% revenue growth excluding M&A and political candidate revenue. Our increased second half revenue guidance continues that trend. Q2 was also our highest ever free cash flow, paired with positive GAAP net income, showcasing the quality of our earnings and driving the largest full-year guidance raise to free cash flow and GAAP EPS in our history. And we're listening to shareholders. We're introducing an initial framework to measure adoption and monetization of Zeta's AI, one underpinned by revenue, because moats are ultimately proven by how long customers stay and how much more they spend over time. I'll cover all of this in detail, along with updates on our pipeline, sales productivity, and drivers behind our increased Q3 and full-year guidance. Let's start first with the top line, where Q2 revenue came in at $443 million, up 44% year over year or 28% excluding M&A. That beat our guidance by $23 million or 5%, driven by faster growth in both super-scaled customer count and ARPU, each exceeding the growth rates in our 2028 model. Super-scaled customers grew to 197, up 17% year over year, more than double our 4 to 8% 2028 model growth rate driven by demand for Athena. Customer gains were especially strong in consumer and retail, telecom, and healthcare. Super-scaled quarterly ARPU expanded to 1.8 million, also up 17% year to year and above our 12 to 16% long-term 2028 model. And we're seeing some interesting usage dynamics unfold in ARPU. First, Athena engagement is increasingly voice first. 83% of customer interactions are now spoken, reinforcing our thesis that natural language will become the primary interface for marketing and business intelligence use cases and has the propensity to drive higher utilization on the platform. Second, the One Zeta sales initiative is gaining speed. Customers using more than one use cases are up 90% year over year. Customers using 5 or more channels are up more than 50% year over year. Cross-sell and upsell deals won in the quarter were up 43%. And we saw double-digit revenue growth across email, CTV, and social, as well as double-digit revenue growth across all 3 marketing use cases: retain, grow, and acquire. And third, demand for the platform was broad-based across industries. 8 of our top 10 grew more than 20% year over year on a trailing 12-month basis, with consumer and retail, financial services, automotive, and healthcare all accelerating from last quarter. Also notable in the quarter was the significant expansion of the sales pipeline and strength in seller productivity. At the end of Q2, the total sales pipeline was up more than 60% year over year and up over $100 million compared to just 90 days ago. On a per seller basis, pipeline creation is up more than 100% year over year as One Zeta and Marigold cross-selling take hold. This is driving higher average contract values on deals won in the quarter, up more than 40% compared to last year. And overall deal sizes in the pipeline increased more than 25% year over year, driven by higher attachment rates across channels and use cases, all while quota-carrying headcount increased by just 1 versus last quarter to 198, up 11% year over year. That gap between pipeline growth and headcount growth speaks to the strength of sales productivity. And importantly, this growth and revenue upside came with impressive operating leverage. Specifically, we generated $92 million of adjusted EBITDA, up 56% year to year at a margin of 20.7%, an increase of 170 basis points versus last year and $5 million better than the midpoint of our guidance. Marigold restructuring actions and integration savings drove total Zeta expense to revenue ratio efficiencies across R&D, G&A, and sales and marketing, improving 30, 180, and 250 basis points year over year, respectively. GAAP cost of revenue came in at 41% as expected. This was 10 basis points better sequentially and 300 basis points higher year over year, reflecting strong social channel adoption by agencies. Cash grew even faster than adjusted EBITDA in Q2. Net cash provided by operating activities was $69 million, up 65% year over year, with free cash flow of $58 million, up 73% year over year, a margin of 13.1%, and free cash flow conversion of 63%. We also generated positive GAAP net income in the second quarter of $8.2 million, compared to a net loss of $12.8 million in the same quarter last year, resulting in GAAP earnings per share of 3 cents. In the second quarter, we prioritized using cash to repurchase shares, deploying $29.9 million to buy back 1.6 million shares. And year to date, as of July 30th, we've spent $74.6 million on share repurchases, with approximately $89.4 million remaining on our authorization. Dilution in the quarter was just 0.1%, and we remain on track to hit our normal course net dilution target of 3% to 4% for 2026. Finally, we closed a new $1 billion credit facility, including a $250 million term loan A and a $750 million revolving credit facility that remains undrawn, giving us the capital flexibility for M&A, share repurchases, and disciplined investment. To that end, we've been investing in AI for nearly a decade. So today's introduction of metrics showing how AI adoption drives deeper platform usage, longer customer relationships, and higher net revenue retention is not new. It's just more visible than ever. Super scaled customer adoption of AI is ramping nicely. Since Athena's launch for enterprise customers 130 days ago, more than 40% of our super scaled customers are already monthly active users, and together they've generated thousands of campaigns using Athena. And customers who comprehensively adopt our AI, using it for audience creation, activation, and other means, contribute a disproportionate share of revenue. It shows up in several ways. Across our total customer base, including pilots, proof of concepts, and scaled customers, the 20% of customers who have comprehensively adopted our AI tools account for roughly 70% of revenue. Among super scaled customers, the 50% who have comprehensively adopted our AI tools drive 75% of super scaled customer revenue. And these AI super users grew 4 times faster than the 80% of customers still early in their AI adoption journey. But it's not only AI adoption that's ramping. It's also leading to longer customer relationships. Super scaled customer relationships now average 56 months, up from 48 months a couple of years ago, and that's based on data going back to 2018. In addition to longer customer relationships, we're also seeing them spend more, generating higher net revenue retention among AI adopters. Customers who have most comprehensively adopted our AI tools have a year-to-date net revenue retention that is 400 basis points above overall Zeta, and more than 20 percentage points above customers still ramping in their adoption of our AI, showing that adoption is translating into stronger, more durable expansion. With tailwinds from AI adoption, higher sales productivity, and strong operating leverage, we're once again raising our top and bottom line guidance for the third quarter and full year. In doing so, we're maintaining our typical conservatism, building in a 2% to 5% cushion that assumes minimal go-get revenue from partnerships and uses 2028 model growth rates for customer and ARPU growth. To be clear, if new customer additions and ARPU growth exceed our 2028 model growth rates, driven by rapid Athena AI adoption or newly announced partnerships, that would push us towards the high end of that 2% to 5% range. For the full year 2026, we're increasing the midpoint of our revenue guidance by $33 million to $1.818 billion, representing growth of 39% or 25% year-over-year, excluding M&A and political candidate revenue. For the third quarter, we now expect revenue of $471 million at the midpoint, up $10 million from our prior guidance, representing growth of 40% or 23% excluding M&A and political candidate revenue. You'll note we're continuing to maintain our original second half guidance for political candidate revenue in Q3 and Q4 of $7 million and $8 million respectively. For adjusted EBITDA, we're increasing the midpoint of our 2026 guidance to $405 million, up $8 million from our prior guidance, representing a year-over-year increase of 45% and a margin of 22.3%, up 90 basis points year to year. For the third quarter, we now expect adjusted EBITDA of $115 million at the midpoint, up $3 million versus our previous guidance. We are also increasing the midpoint of our 2026 free cash flow guidance to $255 million, $20 million higher than our previous full year guidance, representing year-over-year growth of 55% and a margin of 14% and a conversion of 63%, tracking well towards our 2028 conversion target of 65%. Finally, we're raising our full year GAAP EPS guidance to a midpoint of 10 cents, well above our prior range of 2 to 4 cents. It's worth noting this guidance increase excludes the impact of a potential one-time tax benefit from the release of a valuation allowance that has a reasonable probability of occurring later this year, which could represent additional material one-time upside. With that, I'll close where I began. Demand for Zeta is robust and durable, and we're expanding our platform organically and through partnerships to accelerate share gains. That durable demand and record pipeline improves our visibility, giving us the confidence to raise guidance across the board. That visibility supports disciplined investment, and our balance sheet is well positioned to support our growth priorities. And focused execution drives greater profitability and cash generation, which has us pacing ahead of our long-term Zeta 2028 model. With that, I'll hand the call back to the operator so David and I can take your questions. Operator?
If you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. A voice prompt on the phone line will indicate when your line is open. Again, press star 1 to ask a question. And our first question comes from Jason Kreyer with Craig-Hallum.
Great. Thank you, guys. Congratulations. Another great quarter. Chris, you talked about One Zeta and how that's accelerating the adoption of multiple use cases. I think you said 90% growth in multi-use case customers in the quarter. What do you think that looks like over the next several quarters? How does Athena continue to optimize customers and maximize both channels and use cases?
Great question, and thanks, Jason. The short answer is I think we've got continued runway because of One Zeta and the Marigold cross-selling, continued driving both multi-use case adoption, which, as you said, was up 90% year to year, but also 5 or more channel usage was up 50%, and cross-sell and upsell deals within the quarter itself was up 43%. If you look at the trend for ARPU growth over the last couple of quarters, it's been nicely above our 12 to 16% long-term model, and I see that continuing.
And we're seeing Athena really just the tip of the spear. It's just getting started. It's one of the single most powerful tools we've ever had for cross-selling against use cases and channels, Jason.
Maybe a follow-up for you, David. On the ZBI, you just talk about how you go to market with existing customers. Like, what does that cross-sell conversation look like, and what are the key functions in ZBI that are really speaking to customers?
It's interesting because we've had customers that have been using the ZBI for a few months now before we announced it, because we really wanted to get use cases in and tried it. So the use cases I gave in my prepared remarks are real world use cases that they are paying us to develop and create with them. What we're seeing is that customers no longer want static business intelligence. They're not looking to have large numbers of people come in, put data into a user interface, spit out a static report. What they're looking for is how do they make real-time decisions? How do they better negotiate on contracts that they're in flux on, like broadcasting for sports networks? How do they figure out how to better invest marketing dollars and develop retail partnerships like with energy drink companies and so on and so forth? So we're actually getting pulled into the ZBI use cases more than we've been selling them in. And we're now sort of doing a combination of both together.
Jason and investors in the call, we've included slides in the earnings supplemental to David's point to bring those existing customer BI use cases to life. It's actually slides 32 through 38. And David mentioned there's dozens of customers spanning real estate intelligence, customer experience, market sizing, loyalty growth, business expansion, and business measurement, just to name a few.
Wonderful. Thank you, guys.
If you find that your question has been answered, you may remove yourself from the queue by pressing star 2. We'll go next to Matt Swanson with RBC Capital Markets.
Great. Thank you so much. David, we talk a lot about that transition from, Zeta Who to Zeta Why to Zeta Now. Can you just talk a little bit about when you get names like OpenAI and Palantir and Snowflake, it's probably about as good of a trio of partners in this day and age as you could find, how that helps you in your kind of go-to-market process of skip the evangelizing, but also what it can do for initial deal sizes?
Yeah, thanks, Matt. I would tell you that it has been game-changing for us. I mean, the 2 engagements that we signed with Palantir happened in real time. The Palantir guys walked us into 2 of the largest advertisers in the world, and literally we walked out with some of the largest test case and use cases we've ever had as a company, based on the fact that they chose us to be their marketing platform partner. And if you listen to Alex's remarks yesterday, they are over-indexing on partnerships. One of the interesting things that I don't think people understand is that, the Palantir relationship will be one of the biggest we've ever done, because there isn't a boardroom today that doesn't know who they are and isn't interested in use cases that they can do with them. With us as their marketing partner, it's become an incredible entry point. And if you look at the number of customers they published just yesterday, that is the number of marketing opportunities we effectively have in partnership with them. Add into that the OpenAI relationship, which has been one of the biggest we've ever signed, and the Snowflake evolution, we are seeing more at bats than ever. If you saw the 17% growth in super scaled customer count, that's not even the beginning of what we're going to be doing with these new partnerships. In the evolution from Zeta Who to Zeta Now, these are game-changing even when we're not in the room with the Palantir, OpenAI, and Snowflake people. When we're out there, we're coming into meetings now, and the first thing I get is, wow, how did you get that deal done? And I have to say to them, which one? And we all laugh and sort of move on. But I think this is sort of, as they said in the movie Casablanca, the beginning of a beautiful friendship.
That's great. And then I think we touched on a little bit when you were talking about the ZBI and the different uses for data. But when you talked about how your platform is just currently being utilized for marketing, but is not necessarily a marketing platform, how far do you think some of those adjacencies can go in terms of use cases? And have you seen within any of your larger customers any use cases that really have made you think about product development?
Yeah, well, every day we're getting asked questions by our largest clients. Can you help us fix this problem or answer this question in a way that we've never thought of? And it's causing just an incredible amount of excitement. I think it's important to note that if you look at the first quarter of this year, we were super proud to announce that using our internal workflow management tool, Spade, we were able to literally automate 75% of all new code generated. if you look at the update, the actual number for Q2 was 89.6%. I think we rounded it to 90 in my prepared remarks. But this is changing the game for how we take interaction with clients and turn it into product development almost in real time. And if you look at this very large sports league that is using us, we were looking and we were in the room with them and their CMO, and they're like, listen, how do we better negotiate our streaming rights with the two partnerships that are coming up for bid? And how can we equate viewership and mind share for they own multiple products, multiple leagues that are owned by one holding corporation. How do we help them to better show it's not just who's watching it in that moment, but it's the halo effect that comes for the broadcaster by having them on? And we were able to put together a solution in hours that came back and they believe will result in millions of dollars of incremental revenue to them on the renegotiation of those streaming contracts. So it then becomes a flywheel because then we get part of the marketing for those streaming rights. So it really becomes a major flywheel in and around the company, Matt.
Thank you.
And we'll go to our next question from DJ Hines with Canaccord.
Hey, thank you guys. Congrats on a nice quarter. David, maybe we can just follow up on the last point. I mean, ZBI and business intelligence is a massive category, right? I mean, you talk about getting pulled into this and there's a lot of different directions you could take it. How do you think about formally productizing some of the use cases? How do you sequence which ones make sense first? Just high level thoughts on kind of the multi-year playbook would be interesting as you think about building out that fourth use case.
Yeah, and obviously, as usual, great question, DJ. What we're seeing is that our data cloud is able to really help enterprises to make better decisions around certain things very, very quickly. We're seeing big examples inside of retail. What products should they be moving into retail? How do they use co-op dollars and marketing dollars to get better shelf space? And how to create deeper and more meaningful relationships with the end customer. So it starts with the business intelligence around a retail use case. You then end up identifying meaningful opportunities for them to move inventory around geographically, which retailers they should be doing more with, maybe which retailers they should invest less with. And then we end up being able to market to the end user to drive them into the retailer on behalf of the product and vice versa. So yes, we are seeing logical productization, much like we've talked about in the past, where DJ, you've heard us say, yes, our platform can help almost any vertical, but the more industry expertise our salespeople have across the 15 verticals that we operate in, the better they can sell, the higher the sales productivity per rep, and so on and so forth. We're seeing multiple use cases by vertical that we're building into the ZBI, and every new request from every customer becomes productized immediately, and that goes back to the ability to do 90% of your new code on an automatically generated basis. So it's really building a very interesting flywheel as we're growing the ZBI, not just from a revenue perspective, because by definition, it's our fastest growing use case right now because it was starting from a smaller number, but the reality is it's becoming products every moment of every day that we're adding them in from a client question perspective.
Yeah, very clear. And Chris, maybe a more tactical question for you. Look, obviously we're heading into US midterm cycle. I'm just curious what you're seeing in terms of political advertising demand, how much visibility you have there today and kind of how that feeds into the guidance.
Well, from a guidance perspective, DJ, we've held to that consistent political candidate guide of 7 million in the third quarter and 8 million in the fourth quarter purposely, because we wanted what to come through in the numbers was as the strength of the business unfolds in the actuals, the raise is all tied to the strength of the core business as well. The visibility is good in terms of we expect it to be very robust. It comes into the pipeline pretty late because these can be programs that spin up quickly and we execute even more quickly. We get paid ahead, which is nice, so it's good for free cash flow. But we're optimistic that the number we have in there is conservative. And we've got, for the full year guide, is maintaining our normal level of conservatism. So despite this being the largest raise of the year, $33 million in revenue, it still maintains our normal 2 to 5% cushion.
I think it's also important to note, we raised revenue by $33 million, we raised free cash flow by $20 million. So you're seeing a disproportionate percentage of incremental revenue into this business at this point drop to the bottom line. You saw 170 basis point increase in operating margin, and you saw a meaningful increase in free cash flow at 73% growth.
Yep. Thank you, guys.
Thanks, DJ.
And we'll move next to Ron Josey with Citi.
Hi, this is Jake Halleck on for Ron. Congrats on the great quarter, and thanks for taking my questions. So my first is on the OpenAI partnership. So curious, how deeply is OpenAI integrated into Athena and Zeta's broader platform? Could you help us better understand the capabilities Zeta brings to OpenAI's ads ops? And is there a direct revenue opportunity associated with either side of that partnership?
Yeah, so that's a three big questions, Jay. But let's start with OpenAI powers the voice component of Athena. No large language models ever see the data in our data cloud or our client's data. We keep all of that totally and completely safe. And now the data cloud is built on Foundry with Palantir's ontology. So you're looking at a really interesting use case. What does OpenAI bring to Athena? It personalizes Athena. So now Athena gets to know the user at the enterprise better and can begin to understand what questions they have before they even ask them and help them better navigate to outcomes instead of having to navigate a platform the entire way. As it relates to the integration to their ad platform, we are actively serving ads, and it is a meaningful revenue opportunity. It is also scaling very, very quickly. I think it's also, as Chris pointed out, part of the conservatism we've put in going into the year, where we really haven't included pretty much anything from either Palantir or OpenAI as it relates to our forward guidance. And, next week we have a follow-up meeting with OpenAI. We've got 20 people in a room, literally brainstorming what else can we do together. I think they consider us one of their most important enterprise partnerships, and we certainly look at them in the same way.
Thanks. That's so helpful. And I know it's a three-parter, but can I just sneak in one more here? You did appreciate the update on the 90% of new code generated through AI and Athena operating largely on in-house inference. Could you just touch on how those capabilities and that AI code is changing your product development speed?
It's just, accelerating it at a pace that I never thought humanly possible, Jay. When you look at the fact that, yes, we increased operating margin by 170 basis points, we added engineers in the quarter. We did not eliminate engineers in the quarter. So the fact that we're even able to add horsepower to that while simultaneously having 90% of all new code being auto-generated is pushing pushing development cycles, I should say, to what would have been years at one point to what is now months, and new products inside of the ZBI as we productize it to hours versus what could have been months in the past. I think when we get to Zeta Live on October 8th, we're going to have a massive unveiling that I'm incredibly excited about. That's a product offering that will continue to evolve Zeta as a company in a very meaningful way. And it's something that would have taken years that we're now going to be able to have done in months.
Thanks a lot, David. Appreciate the color.
And our next question comes from Elizabeth Porter with Morgan Stanley.
Great. Thank you so much. So I just want to do another follow-up on ZBI and how that's changing some of the market opportunity. We used to talk about Zeta having 1% of the marketing wallet, but an opportunity to be closer to 10%. Just as you're going kind of beyond marketing to the broader business intelligence, how should we think about the wallet share that's up for grabs and how that changes the ZBI? And just as a follow-up, how should we think about the sales cycles as you expand from more of a CMO-focused product to just broader touch points across the organization?
Elizabeth, let me start by saying welcome back. We've missed you.
Thank you.
You're welcome. From a ZBI perspective, I want to be clear, we're still looking to get to 7 to 10% of our clients' marketing wallet share. That's not changing. We believe that we are on our path to building a $10 billion business with a 30% operating margin, with the vast majority of that dropping to free cash flow on the marketing component of our business alone. When you look at the ZBI and the opportunity that it's opening, what we're seeing, and what really happened, Elizabeth, is we started getting pulled in that direction by our clients at first. That then accelerated massively with the Palantir partnership, whereby putting our data cloud on top of Foundry and the ability to onboard seamlessly our clients' data in ways that we couldn't before, and using their ontology in a way that we couldn't have done without Palantir as a partner, that's opened up this entire new use case from a productization perspective. I think we're going to look at two different sales cycles. I think we're going to have existing clients that are going to adapt or adopt the ZBI very quickly. Then I think we're going to have new clients that we're going to go out and get, where you're going to start with the CIO or the CTO, and that could take a little longer. As you know, our normal product cycle is anywhere from 90 to 180 days. I think this will be very, maybe start out on the longer end of that for new customers, but we'll start on the shorter end of that for existing customers. And quite frankly, we've seen much, much faster than that from an adoption perspective from existing customers who are adding ZBI as their third or fourth use case. Does that make sense?
That does. Thank you very much. And I wanted to do a quick follow-up on Athena for agencies. It sounds like you had a lot of high interest in France this summer. So when we think about the base of agencies, is there a certain proportion that's a good client base for Athena for agencies? Is there any sort of specific subsegment? Or do you think that most agencies could adopt Athena over time? And what are you learning about the onboarding cycle that could potentially drive some faster penetration?
So to answer your question, I was shocked because I thought it would really start at the mid-size agencies from an entry point perspective. We're actually seeing the larger agencies adopt it faster and at scale very, very quickly. It really changes the game for them from a navigation perspective and the ability to showcase for their customers our data cloud and the ability to drive substantially higher return on marketing spend. As you know, Elizabeth, we always talk about we deliver, according to Forrester, 600 to 700% return on marketing spend. We're seeing clients who are adopting Athena at substantially higher rates than that. In partnership with a very large agency that adopted Athena and a very large airline, we're seeing that airline today at a 1,400% return on marketing spend, post the agency bringing Athena in and us putting together the project together. So I actually thought it would be small to mid-size. It's starting very, very large, and it's scaling, quite frankly, a little faster than we expected.
Great. Thank you.
And we'll move next to Arjun Bhatia with William Blair.
Perfect. Thank you, and I'll add my congrats on a great quarter. David, I'm going to start with you just on Palantir. It sounds like, obviously, you did the tech migration and you're on board on Foundry, but it also sounded like you're closing some deals already on the cross-sell. So would be curious to hear just what that pipeline looks like into Palantir's commercial customers. And, just as you look across different verticals, are there any inside that commercial base that get you more excited than others from an opportunity perspective?
Yeah, I'll be honest. I publicly said that I plan on doing the first 20 deals in partnership with Elias Davis, who's become a very good friend of mine, who's one of the top guys at Palantir, reports directly into Alex's office. And we've been going out, and I would tell you that if I put the numbers of the deals we're working to into our pipeline, it would artificially skew our pipeline up too much at this point. It is that big an opportunity. So I'm sort of working on it on an internal pipeline that I'm running in my own office at this point. I'm embarrassed to say I'm doing it inside of Claude. But the reality is that this is maybe the biggest opportunity we've ever had in front of us, certainly the biggest opportunity we've ever had from a partnership perspective. And as you know, we have 15 different verticals that we operate against. Not one of them is a massive concentration. So when I look at their client base, I started by saying, why don't we just start with the 20 customers who spend $1 billion a year on marketing to consumers? And the list was so much longer than 20, we had to pare it back to start going out there and getting into it. The two deals we closed were at 100% hit rate. Met with 2, closed 2. We've got some other very large ones in flight, and we see this as a meaningful and very large opportunity that, as Chris said, is not baked into the numbers just yet.
All right. That's great to hear. And then, Chris, maybe one for you, or I guess maybe for David also, but would love to hear sort of your updated thoughts on capital deployment with the new credit facility. And, I think you pointed out M&A as obviously a potential use case, which you've been sort of consistent on, but I'm curious if there's any sort of change in the type of acquisitions or assets you're looking at in the market.
Chris pointed to me, so I'll answer it. What I would tell you is we are going to continue to focus on our 5 pillars of M&A. That is not going to change, although you can look at the fact that for us at this point, we have to continue to evolve the type of deals we've done or will do, because some of the smaller deals we've done over the years just wouldn't move the needle for us at this point. I will tell you, Arjun, you've heard me say this many times over years, I believe transformative M&A transforms both companies for the worse. So we are not looking to go do one huge transformative deal. We will continue to do small to mid-sized deals where we're adding great human capital, great data sources, incredible products that our clients want to buy, and clients that want to buy our products, and so on and so forth. This does give us optionality around the buyback. It could cause us to accelerate it in the short run, depending on how the stock trades. But the reality is it puts us in a position that we have a lot of flexibility as a company. I mean, you can see the cash position is also very, very strong at the close of the quarter. And we're projecting, I'm pretty sure this will be a record free cash flow quarter for us, right? Yeah. So, we last quarter, you can do the math, we bought more than 50%, I think closer to 75+% of our free cash flow and share repurchasing last quarter. We're going to continue to buy the stock back at these prices because we think we continue to be the best investment we can make with our free cash flow is purchasing back our existing shares.
All right. Very helpful. Appreciate the call. Thank you.
And we'll move next to Kelly Valente with Goldman Sachs.
Hey, team. Thank you so much for taking the question. So new AI products have generally taken a while to ramp in usage for many software companies. Are there a couple key things you would point out that you think have made your customers adopt new AI tools faster than what we're seeing in the rest of the market?
First of all, Kelly, congratulations. Callie, I'm sorry. Congratulations. We're super happy to have you covering us. Return on investment. I think one of the things you see in our business strategy is our ability to show a return on investment is second to none. Most AI products where you're making a large investment into whether it's infrastructure, software, or technology take years for enterprises to show return on investment. Our 4 use cases show massive return on investment. As we've talked about, our marketing use cases show a 600 to 700% return on marketing spend effectively day one. And if you look at the ZBI, we can't quantify it just yet, but we're giving real-time business decisioning that drives massive incremental profits into our clients in real time. So I think that's been one of the big differentiators for us versus companies that are out there selling, very expensive technology that will take years to pay off.
Yeah, that makes a lot of sense. Thank you. And then just one more from me. We're hearing more companies talk about headless architectures as agentic kind of potentially disrupts the UI or traditional UI. How do you think about this in the context of Zeta? Like, what makes sense for you? What wouldn't make sense for you?
I mean, listen, we've been no code for many years around here. So when you look at what they're talking about as it relates to headless, that's not something that I think we end up dealing with on either side. I don't think it becomes a competitive force for us, and I don't think it's something that we would move into quickly from our front. What we're really focused on is what percentage of our new code can we generate and make generally available to our clients. And we've gone from what was 75% to 90% in the first quarter of this year to the second quarter of this year. That puts us in a massive competitive advantage. As our competitors are trying to catch up to where we were a year, 2 years ago, we're already moving to where they won't be able to get for many, many years. And I think our no-code architecture has allowed us to do that.
Awesome. Thank you so much.
And we'll take our next question from Terry Tillman with Truist Securities.
Hi, this is Luke Radice on for Terry. Thanks for taking my questions. To start, considering the big strategic win with GAAP, how is RFP activity? And what are you seeing in terms of large MarTech replacement cycles, potentially aiding revenue and business in the second half or helping enhance visibility into 2027?
Hey, thanks for the question. Just real quick, RFP activity is very strong. You heard about the pipeline stats that we shared. That's built into the greater than 60% year-over-year pipeline growth. I think it also speaks to how the average contract value in the pipeline is up because more of it is RFPs. I'll turn it quickly to David to talk about broadly what's driving that environment.
Yeah, I mean, we are right in the middle of what looks to be a marketing cloud replacement cycle. And GAAP was a perfect example. GAAP had been with one vendor, Salesforce, for quite some time. There were 3 other vendors that we displaced in addition to Salesforce to become the system of record inside of GAAP. And when you look at these very large organizations, they don't want to use 4, 5, 6 different vendors, including a software provider, a professional services firm, activation platforms, data, CDP, all separate. These very large enterprises want next generation technology. And today, we are the only marketing cloud that has data and AI as native foundational to the application layer. So as other entities have to step out of their platform through API integration to use AI and then to get to the data sources and then back to the AI and then back to the platform, that latency destroys return on marketing spend. Our foundational platform can answer in a millisecond what other platforms can't answer at all, to be quite frank. So we're actually seeing RFP velocity go up, and we're seeing closing go up as we saw in this quarter. And we have a record pipeline right now. It's by far the largest we've ever had. So I think we're very well positioned for where the market is and where it's going.
Great to hear. And if I could sneak one more in, given the increased adoption with Athena and AI-enabled workflows, could you help us think about the puts and takes on gross margin performance in the back half of 2026? Thank you.
The gross margin performance in the back half of the year is largely dependent upon mix. So we talked about how the second quarter came in where we expected, given where the direct mix was in the quarter of 72%. Where that efficiency plays in, by the way, not just in R&D, but also across G&A and in sales and marketing as well, is we saw in the second quarter, and we expect to continue to see very strong unit economics on our expense to revenue ratios. That showed up in very strong adjusted EBITDA margin. We're continuing to see efficiencies in CapEx, which then obviously flowed through the higher free cash flow. And then the good work on dilution and on stock-based compensation generated the very positive GAAP net income.
Awesome. Great to hear. Thank you.
And we'll go next to Jack Nichols with KeyBanc Capital Markets.
Hey guys, thank you for taking the question. David, maybe to start with you, how are you thinking about the opportunity for Athena's heavy users today, post-Foundry infrastructure pivot? And what does that mean for these heavy users on the new platform? And what's the biggest risk in the coming months during the transition with the move to Foundry?
Well, so to be clear, the transition's done. It's seamless to our clients. We re-architected the data cloud on top of it and adopted their ontology. So it is a massive benefit to answer your question. So when you look at Athena, at the top of our tech stack is now going to be Athena powered by OpenAI. She will then interact with the Zeta platform in addition to the data cloud. Every time the Zeta platform and the data cloud access data, it'll now be inside of Palantir's architecture, which moves extremely faster than the architecture we were working on before. So we'll be able to answer more questions smarter and faster. We'll be able to onboard new clients' data faster and with better orientation, which will allow for higher levels of intelligence faster. As you know, the longer a client has worked with us traditionally, the smarter the platform has gotten, the faster the return on investment. With Athena and Foundry, we're seeing that happen faster. Instead of taking years of managing questions, it can now take days to get to the same level of return on marketing spend and the same intelligence that used to take us years. And that, I think, is going to drive much faster adoption. And once again, heavy users had a 400 basis point higher net retention rate than our other clients for Athena today. I think you're going to see that number continue to evolve.
That makes a ton of sense. Thank you. And maybe for Chris, what kind of usage trends of Athena are baked into the super scaled ARPU growth to achieve the organic guide?
What we have line of sight to. So, and that, by the way, same is said for the partnership agreements. We talk about the multiple layers of conservatism. What we built into guidance is what we signed already. So we're not leaning into anything on a go-get perspective on either AI adoption or newly signed partner agreements that are still yet to be closed in the pipeline.
Awesome. Thank you.
And up next is Matt Bullock with Bank of America.
Great, thanks. I appreciate you taking the question. I was hoping you could maybe put a finer point on what's working well in terms of driving improvements in sales rep productivity. And then can you help us think about the outlook for quota-carrying rep headcount for the remainder of the year to address the pipeline you talked about? Thank you.
Yeah. So first off, One Zeta continues to be gaining speed. So we launched One Zeta, call it 15-ish plus months ago, and we're starting to really see the benefit of our sellers attach more channels and more meaningfully more use cases into their deals. We talk about pipeline creation per rep being up around 100%. That's a big source of it. Also, we're called 6 months now from acquiring Marigold. All the hard work on the integration has been done both within the G&A sales, marketing, R&D structure. Now we're starting to see the benefits of the cross-sell and the upsell activity, namely really around their loyalty products and selling Zeta's acquire and grow use cases in. So I feel like, we're at a place where we've got the right tenure of reps, meaning the right balance between those who are in their first 12 months, 12 to 24 months, and greater than 24 months. where the type of productivity we're seeing now can really continue to go throughout the year.
I also think our hyper-focusing by vertical, by salesperson, has really unlocked a massive opportunity. That was sort of an aha moment for us, Matt, where we start to see when we bring in people who have industry expertise in a vertical and they sell, their productivity goes through the roof.
Got it. Thank you very much.
And we'll go next to Richard Baldry with Roth Capital Partners.
Thanks. You talk about in the generative engine optimization side, do you think that's helping you win client wallet share, or is those dollars really sort of moving from one channel to another?
You know, because we never did search engine optimization, it's 100% upside to us, Rich. So the other thing we're finding is that new clients are really excited about that. And we're one of the very few companies that has an API integration into Claude, ChatGPT, and Gemini. So we're able to help across all of those platforms in real time through one GEO user interface. And then we're able to serve the marketing, obviously, into Gemini and into OpenAI as a subset of that. So you're able to really move the flywheel in a way that I don't think others are able to do. I think new customers see that as a, quote, shiny new thing and think it's very exciting. And we're seeing existing customers adopt it as a part of their marketing strategy.
And actually, maybe if you think about how fast moving those generative engine corporations are that you're partnering with, and Palantir, you know, itself is a different use case, how fast that company is moving. You've really grown without adding a lot of headcount in recent years. Do you think there's a point at which to try to keep up to those opportunities, you need to, you know, add a bit more to the headcount to support the fast growth in those areas?
We're just not seeing that right now, Rich. We're seeing productivity in the company go up at a rate that I didn't think possible. Not only are we seeing, you know, as I said, 89.6, call it 90% of our new code generated. We did a really interesting deal this quarter where we signed one of the first sort of ubiquitous enterprise agreements with OpenAI, where all of our global employees now have access to all of OpenAI's products. And not only are we doing that, we're doing it in a way where the use cost for everybody is baked in. So we've got a use cost for everybody. If power users go over a certain amount of token usage, the platform actually refers to their manager to approve additional token utilization. I think as we're building productivity tools like that, we're seeing sales productivity explode. At the same time, we're seeing total AI cost for the company internally well under 1% of revenue. And we think that's something that's going to continue. So I spend a lot of time on this, as you know. I mean, I think we'll add headcount, but I think we'll add headcount at a slower pace than we grow revenue. And we'll continue to grow EBITDA and free cash flow at a much faster rate than we're growing revenue, if that makes sense.
Yeah, David's exactly. We've actually added headcount, just grown revenue much faster. And even though that AI-based usage is up across the company, unit costs for that AI are down almost 40%.
And that's because of the relationships we've been able to negotiate.
Congrats on a great quarter.
Thanks, Rich. Once again, I'm so proud of the team.
And we'll move next to Scott Berg with Needham.
Hi, everyone. Nice quarter. I'll skip the 17 Palantir questions, move to something a little different, I guess.
You're kidding, Scott. You don't want to talk about Palantir?
Oh, I do. We'll speak on it plenty coming up pretty soon, I'm sure, David. But my question's on your expansion opportunity, especially within your super scaled customers. You know, the slide in your deck, in your presentation deck in the quarter, I thought was kind of interesting that you've been kind of range bound on the ARPU for your super scaled customers over the last 7 quarters. It's kind of bounced around from 1.6 million to 1.8, just kind of back and forth. we know you guys are doing a good job of expanding with some of your customers and trying to just trying to better understand that dynamic, I guess. Are some of your new customers maybe coming in with a slightly lower ARPU on that super scale level to just kind of balance that out, or maybe the metrics not reflecting some, maybe numbers or some expansion deals that we're maybe expecting in the back half of the year?
It's more the latter, and I'll go quick just so we can get other questions in, but there's a slide 8 in our earnings supplemental. What's masking that, Scott, is that as new pilots and proof of concepts become super scaled, so they cross that 1 million threshold, they are still a distance from where our more mature, those super scaled customers that have been on the platform, call it 2, 3, 4 years, that have a ARPU that is 4, 5, 6 times greater than those that are in their kind of early part of the journey. So what you'll see on the slide is the average size in terms of ARPU of a customer who's been on the platform less than 12 months is $700K, as opposed to those that have been on the platform four more years, that's now approaching 4 million per. So we're actually seeing those super scaled customers get bigger, become a bigger and bigger part of our overall revenue, and have a greater and greater share of our net revenue retention.
Thanks for taking the question. I'll jump in the queue.
And we'll go next to Clark Wright with D.A. Davidson.
Awesome, thank you. It was great to see better than expected organic growth results this quarter. How much of this growth is coming from continued success with agencies versus your direct enterprise sales motion?
I think it's really well spread out, Clark. We continue to see the agency business at approximately 20% of revenue, and we continue to see direct to enterprise at approximately 80% of revenue. So we haven't seen that skew meaningfully, but we're seeing meaningful and organic growth across both those components.
Awesome, helpful. And then there was a sequential step down in direct platform revenue from 75 to 72%. What caused that this quarter, and is that something we should expect going forward to be at that level?
I was just about to add to David's answer. What drove that was new sales and expansions with agencies. In fact, just within this quarter, since we closed and within the timing of this earnings call, we closed and expanded with another very large holdco. And as you probably know, Clark, those newer agency signings tend to begin with social. And social is a channel grew very rapidly in the quarter again, and drove the integrated platform revenue mix to be higher, and then as a byproduct of that, the direct platform mix to be at 72%. But it was where we expected based upon how we saw the pipeline, but it's driven by very strong agency adoption of social as the initial channel.
Got it. Thank you.
And we'll go next to Naved Khan with B. Riley Securities. Your line is open.
Hi there. This is Ethan Wydell calling in for Naved. Thanks for taking my questions. To start, it's great to see that you've had really strong uptake of Athena since making it generally available, but it sounds kind of like the costs haven't scaled at the same pace as usage. As usage does continue to scale, how should we maybe think about the way that cost scales? Or token costs passed directly on to customers, or does usage become a cost of revenue consideration?
No, so I would tell you that we've done an agreement with OpenAI where we have a tremendous amount of visibility into our cost, and in this particular product, it's not focused on token utilization. So it's focused on a sort of a license for the product that is fully embedded into Athena. I feel very comfortable that we will be able to continue to keep our total AI cost well under 1% of our revenue, while simultaneously growing revenues at obviously substantially faster paces than that, Ethan.
Understood. That's really helpful to hear. And then separately, so 8 of your top 10 industries grew over 20%. Can you maybe speak to how those areas are pacing so far in June and July?
I don't want to get, first of all, the performance within our quarter and 2Q was pretty linear, and I would expect third quarter to be the same way. I don't want to get into projecting third quarter, but what I can tell you is the momentum that they have. We talked about within 8 of the 10, and by the way, one of those 2 that didn't grow over 20 was advocacy, and that obviously has a lot of tailwinds going into the second half of the year, so I'd expect that to be one of those greater than 20s next quarter. But there were several of our industries that actually accelerated in their growth from a trailing 12-month basis ending the first quarter.
where we ended in June. Those were consumer retail, financial services, automotive, and healthcare, all industries with, obviously a lot of marketing spend behind them.
Obviously, we wouldn't have raised the quarter by $10 million if we didn't think we had a lot of visibility into the quarter, Ethan. So as Chris said, we don't want to comment on 1 month, but nothing that happened in July would lead us to believe that we shouldn't have raised the quarter and the year as much as we did, or we would not have done that, if that makes sense.
Understood. Yeah, that's really helpful. Thank you for the color and congrats on the strong results.
Thank you so much.
And that concludes our Q&A session today. I'll turn the conference back to David Steinberg for closing remarks.
I just wanted to close on how incredibly proud I am of the Zeta team to be able to continue to execute 20 for 20 quarters as a public company, 20 quarters beating and raising, to continue to execute over that period of time with that level of excellence, to continue to see accelerated sales growth, to be able to do partnerships with 3 of the world's most important companies within just a few months. If you had told me a few years ago that we would be in a position to announce partnerships like OpenAI, Palantir, and Snowflake, I would have been blown away by that alone. That shows what's happened to Zeta as a brand, because none of them would have trusted us if they didn't trust our brand and they didn't trust our business. So thank you again to all of our Zeta people, to all of our clients, and especially to our partners. We appreciate everything that you guys are doing for us and with us as a company. Have a nice day, everybody.
And that concludes today's call. Thank you for your participation.
Wow.
Are you
Okay.
serious?
Dude. I kept spamming the buy button in after hours because I don't care if it doesn't recover quickly. If it keeps falling, I will keep buying. Like, did anybody else just hear that call? Or is it just me? Nick, did you just hear that call?
Yeah. That was great. Honestly, give me 1 second here.
I mean, guys, we've now covered, I don't even know how many. We've covered the past like 3 or 4 earnings calls. Never out of all these earnings calls have I heard analysts be this intrigued or heard analysts ask this many questions. And it just makes you think, are we about to see some price target rate raises this today and tomorrow? I mean,
we have to see price target raises.
New analysts were on there. I mean, the level of questions they were asking, how deep they were. I mean, the amount of just like the amount of information that we just got out of that call, it just answered like.
So let's dive into it a little bit, guys.
Yeah.
I think the elephant in the room here is David said something about Zeta Live. And I'm just pulling up the quote. He said, quote, where it is here. When we get to Zeta Live on October 8th, we're going to have a massive unveiling that I'm very, very excited about. That is a product offering that will continue to evolve over time. We all know, if you tuned in to that roadmap, the AI roadmap that they had not too long ago, we all know what he's talking about. He's talking about AthenaOS. I think this is going to be the formal sort of amalgamation of all channels into one ecosystem or one platform to offer a competitive product against something like a ServiceNow, right? And their AI control tower. I think this is what it's going to be. Previously on the AI roadmap call that they had not too long ago, where they changed themselves into this AI infrastructure company, and they were this whole rebranding and whatnot. And they kind of leaned into that in this call and in the slide deck today. He said he's not sure when this new product is going to be released, but today he said this new product is going to be released for Athena Live. So something has happened. I think probably that largely had to do with the migration of Zeta in their data cloud onto Foundry. Now that that is confirmed, I think that kind of unlocks this new potential and allows Zeta to create all these different plugins, whatever it may be, to kind of create this robust ecosystem and competitive product. It's kind of funny because Carp, if you listen to Palantir's earnings call yesterday, his language about partnerships was kind of interesting. He mentioned how, first of all, he mentioned how he didn't like how some clients they compete with or some partners they compete with, but competition sometimes is okay and we're fine with that. I'm kind of curious, who is he talking about? Like, who have they partnered with that they compete with? And it kind of makes sense now thinking about it. If Zeta is actually really leaning to business intelligence, there is some overlap with Palantir there, and we've all sort of had that question mark. So I think it's the sort of that holistic picture is starting to play out. That's the elephant in the room that I thought that was very interesting.
The second elephant in the room is that David literally came out and said, where is it at? Let me get this. Yeah, I'll go with this one. Sure. He said the 17% in super scale customers, basically what he said is it doesn't even scratch the surface on what they think they'll be able to do with the Palantir partnership and the cross sell. And then he also said that they met with 2 Palantir cross sell clients and closed both deals, and they're batting 100%. And that leaves 868 more clients to potentially close.
Yeah, it's impressive.
I mean,
It's moving quickly. When he said that, my eyes kind of lit up. I said, I mean, obviously I had my camera off, but I was quite impressed to see that we're going to have customer acceleration. That's great. That's great to see. And those are customers who are spending more than $1 million per customer. And like I said, they have to change that stat pretty soon because the previous earnings call, Chris Greiner mentioned that the majority of those customers are well above 2.5 million spend. So annual spend. So that's something to watch. Davis, anything to add?
There's so much in this call that I loved. I mean, I wrote them out. They said that their $10 billion long-term target, they plan on having 30% operating margins, most going to free cash flow. And he said that is only from marketing. And now they're implementing all these other different sectors. You have business intelligence. It's like, okay, that's amazing. Nothing in the guide takes into consideration the OpenAI or Palantir partnership. Like, are you kidding me? I said, I didn't think they were going to be able to until 2027, but for him to confirm that, it's like, okay, this is sandbag to hell. They got 100 customers from Snowflake so far. And I think in their slide deck that they said they had 90 customers that are now using one or more of their products. Well, that number is just going to explode once they onboard all these clients from Palantir and Snowflake. Foundry was fully implemented into Zeta at the end of July. They're going to have that one-time tax credit. Now they're profitable. I'm just sitting here just blown away. Like Ronnie said in the beginning, I was actually engaged in this earnings call. And I'm just a regular retail guy, but my attention was just glued to listening to every single word. And I definitely want to re-listen to it so I can digest it better. But I was looking on my table, and just in relation to stock price going down, like, this is how I feel. Like, I just don't care if the stock price is going down. Like, it is fine. I have to add. Like, I have to. It'd be
if it goes below
irresponsible.
20 again, if it goes below 20 again, guys, I mean, I'm gonna do some ludicrous things to raise some capital to get more in the stock.
Yeah, I'm so excited.
It's if you have conviction in this company, if you're a true bull in Zeta and you understand what's actually going on here, if we've been able to help you understand that, or you've done your own research, you should be very excited. We are all very, very excited about this company. And I want to talk about David's energy, right? So in the beginning of the call, everybody's like, this is boring, blah, blah, blah. Like, remember, at the beginning of the call, there's a lot of numbers. There's a lot of girth to get through, right? There's a lot of meat and potatoes to get through. So he is reading just this script, okay? But whenever he really starts getting these questions asked, that's when he really starts coming alive. He's already a very confident person. but there was something different about this call. I mean, the way that he carried himself, the way that he answered these questions, it was, I don't know if you guys caught it, but it was very like, he seemed like a very excited, like, temperament, very excited, very like, confident, and just like kind of blown away even by what they've been able to do so far and like what's to come. Did you guys pick that up from the call as well with him answering these questions and stuff?
I feel like he's like this all the time.
I feel like it was different today. I mean, yes, he's a confident person, but like today it just really felt different. Like the amount of, I don't know. Maybe
There
I'm
was
maybe I'm
to
reading
me
too.
to me there were some moments where he felt very enthusiastic, but there were some moments where to me it was almost monotone. But I listened to a lot of earnings calls multiple times. I listened to a lot of their content, and I'm not going to come out there and say that this was an overly enthusiastic call. I think there was moments of enthusiasm, specifically about like generative engine optimization, the Palantir deal, and some OpenAI stuff going back and forth. But a lot of what they said today, Zeta's management has been repeating it for months and months and months and years and years and years.
Yes.
So to be honest, I think those moments, those were maybe perhaps the more monotone through my perspective moments, but there was moments of enthusiasm, and it was around that Palantir content. And specifically, something that I noted that actually made Chris Greiner seem a little bit more enthusiastic than he normally is. They mentioned the users who had heavy Athena application had a net retention rate that was 400 points greater than the average net retention rate, which is a great indicator of how well what was it? The net revenue retention rate. Sorry, not retention rate as a client, but I'm sure that's quite high as well. But revenue retention is much higher, which is quite impressive to see that. Okay, Athena is actually showing some value in that flywheel's in full motion. I made a post during the call as well. Let me pull it up here. It just kind of capturing the performance in this little situational report of Athena. As of this last quarter, clients with one or more channels increased by 90% year over year, almost doubled. Remarkable. They had that issue before where they were trying to get clients out of a single client application into two or more. 90% year over year growth. 5 or more channels grew by 50% year over year. The average deal size grew by 25% year over year. Cross-selling deals grew by 43% year over year, and total sales pipeline grew by 100% year over year. That's remarkable. That's ridiculous. It just shows you that Athena, the intent of Athena, the purpose of it is to be this free product that pushes different Zeta applications and different Zeta products and channels in front of the customer at no cost to the customer. But the moment that they subscribe or they enable that new channel, Zeta starts making revenue from this same client. So it increases ARPU significantly.
Yeah, and I think we got to discuss it. I don't know what's up with some of these brokerages, but there was a lot of misinformation out there. People were saying that they missed earnings by like 80% and like all this craziness. People were sitting there like, oh, it was 15 cents of EPS expected. And like, no, like some of these brokerages were way off. And people were saying in the comments that they were getting notifications from Robinhood that they missed earnings by like 80%.
That happened last quarter as well with Robinhood.
Yeah, that kind of sucks because like we talk about, a lot of people trade this name and there's a lot of algos out there. I don't think the algos got it wrong for sure, but there's a lot of retail, and this is after hours, is lower volume, not to make excuses, right? But it's just like, it makes the beginning of the trading around and the movement of the stock very poor, because you get people selling. Like, imagine somebody that doesn't really, they're invested or they're trading it and they see like they missed it 80%. They're spamming that sell button. They're not double checking that thing. They're spamming it. I know as a trader, I'd be spamming that sell button like, give me out, give me out. So yeah, it dropped, 13%, and then it's recovered to 7%. It is what it is. Like I said, I think what comes next is what analysts come out. Are they going to stay at a buy? Are they going to raise rates? Or they're going to raise rates? FOMC, geez. Are they going to raise price targets? So on and so forth. God, I really just like the amount of questions they were asking. That was probably one of the longest earnings calls that was the longest earnings call we've ever sat through on Zeta since we've been doing this. Lots of new analysts, lots of very in-depth questions. I mean, guys, like the stock price is down, like red bad, but they crushed it.
I don't know what they did. They did nothing wrong. It's crazy. I don't know. I think I saw some similar things in my X feed about, even Yahoo reporting the wrong numbers as if they missed by 17%.
Crazy,
It's
dude.
really weird. So if that's true, I haven't seen any evidence that actually happened. So if anybody has a notification or any screenshot or something, please send it our way, because I'm curious, like what caused that sell-off? No idea. It did run up before close, and sure, maybe it's selling the news or something, but that's quite dramatic, and for it to be sustained as well, very weird. Because like I said, dug through this entire report, I don't see any massive bearish flags that indicate, hey, this is there's something here worth selling. For example, like honestly, Ronnie went and just bought a bunch of shares. That's I didn't buy anything yet, but I'm just waiting patiently.
Hey, did they answer that? You said you had an idea of what they might announce, or you had some speculation. Did they answer that, Nick?
No, they did not. So there's something I saw. I'm not going to say it because I don't want to report false news. So I want to confirm it first. I want to go on and ask some questions to somebody at some point of time. So when I get that opportunity, and if I can confirm something, I will let everybody know. But as of right now, it is not confirmed. It does look like what I suspect is true, but I can't post it. I can't post it without confirmation.
I feel like
shoot them a text.
I feel like there was a lot of talk around energy drink companies, and I'm feeling like a Red Bull or a Celsius here. A Celsius would be Celsius could use it because they've been beaten down, but also Celsius has a lot of big brands. Like I'm pretty sure I think Celsius is second to Monster right now with actual brands and stuff. So Zeta land someone like Celsius, yeah, it'd be pretty big. Here's somebody that commented. This is on Public. Public has a janky logo, but yeah, 80% miss. Expected 15 cents.
It's not loading, Ronnie. I don't know what's going on with your screen.
I see it.
Yeah.
There it is. 8. Whoa.
Yeah. Imagine being a trader and seeing that. Get me out. Get me out. Get me out. Zeta's trash. Ronnie's an idiot. But yeah, so like this and then like the Robinhood thing. So again, not to make excuses. It is what it is. The stock can be down. That's totally fine. But it doesn't it's never a good thing to like get a bunch of brokerages spamming their people about a stock that they own with misinformation. I mean, that's just never good. So, but whatever. This is, I mean, we can all agree this, like we talked about before the earnings, like this has continuously been a journey. I'm pretty sure all of us have been in this name for over a year or around it. It is what it is. People held Palantir for a very long time. People were buying Palantir at like what, 29, 25, 20, 15, 10, 5. Like people kept buying, like a huge drawdown from a bear market. And then eventually they got rewarded. They were called idiots. I was called an idiot. It is what it is, man. Like what we do know is the fundamentals are just increasingly getting better. And I really liked your post, Nick. Eventually, they cannot deny this company any longer. When that is, I think we're definitely closer to that time than farther away from it for sure. When it is, I don't know. But I mean, they're just destroying it. And again, like you said, Davis, they're not even, the guide for this year doesn't include anything Palantir, OpenAI related. And that's insane because what do we know? OpenAI and ChatGPT are already running ads.
Mhm.
and they penned Zeta as their GEO company. And then they just said they landed 2 deals off the first 2 sales. And then I really liked where David said, and definitely the excitement, like you said, Nick, it was definitely like more around the Palantir and the OpenAI stuff for sure. There was a lot of monotone stuff in there, but yeah, I guess I was more focused on that. But you definitely like his enthusiasm around that was like you could hear it. He just sounded so confident, David sounded like you guys have no idea what's going on back here behind the curtain. Like no idea how many deals we're working with. He said, we are getting so many at bats. We're getting more bats than we would ever imagine. If you don't understand what that means, it literally means that they are getting to come and sit with other enterprise clients, potential enterprise clients, than ever before because of this deal with Palantir. And that's what we've been screaming about this entire time. Like this partnership with Palantir benefits Zeta in such a big way. Like they don't have to land all 870. They only have to land 120. If they land 10, 50, 100, that's insane for what they can do. Because also you can't forget that Zeta expanding the wallet share is one of the most bullish things for this company. Because right now it's so small. So as they continue to get their clients to spend more money, they're going to make more money. So insane quarter, crushed it. I mean, it's honest. Like, yes, it is crazy that the stock price is down, but at the same time, it did run up into it. But then at the same time, this company is severely, severely, severely undervalued. It's just a marketing company, and now it has all this pizzazz around it. People still don't believe it. That's just like you look at I look at the comments. People just don't believe it. They still think this whole company is just like it's just saying these things so it can get some AI hype and then the stock price goes in their favor. And it's just like if you're saying that, you clearly are blind. Like you literally are not looking at the numbers and what they're actually doing because it's all up and down everywhere. And if they were lying like that, then they would be absolute effed with a lawsuit.
Yeah. So I don't think you would see these partnerships and this collaboration.
No.
I don't think
Why would Palantir partner
exactly.
with them if that was the case? Why would OpenAI partnership with them? Because that would make them look so stupid. So stupid. Like, you think they didn't have investigators run up and down Zeta's numbers and Zeta's team and everything? Like, come on. It's just such stupid bear cases out there. That's how I know I'm right. I don't even care.
I agree. I got to go here in a moment. I think this was a fantastic quarter to kind of summarize. I got some stuff to dig into. Like Davis said, I want to listen to it again. I didn't catch that part that Davis said where they specifically, was it David or was it Chris who came out, Davis, who said that $10 billion long-term target with the 30% operating margin? We knew this before, but he specifically said that was only marketing.
That was David.
Okay. Was that early in the call?
I didn't catch that part either, honestly. Nice catch, Davis.
I mean, I hope I'm not wrong now. I usually don't catch things that you don't catch.
Yeah, please go back, find it, cite it. I'd love to see that. But that to me, that's awesome long term, especially for long term investors. That shows you that their base long term guide is fundamentally founded in their marketing platform, meaning that the entire business intelligence vector or revenue segment is complete upside, which is awesome to see as a long-term investor. That means their TAM expansion is remarkably large and the opportunity is greater than we first thought. That being said,
people are talking about the stock-based compensation is the one thing, the bugaboo on the earnings. And
it's not going to sell off a stock 13%.
No, definitely not. And again, it's like, okay, you can keep saying the stock-based compensation. Palantir did the same thing with the stock-based compensation. And then guess what? They overcame it just by crushing the numbers and they kept doing stock-based compensation, but then they started doing crazy GAAP profitability and free cash flow. And now Zeta's doing it when they literally just did the second highest stock-based compensation they've done in the last 2 years, last quarter than this quarter. And again, I don't know this for sure. I don't know why it was so elevated, but again, I know it was elevated last quarter because of the stock-based compensation around the Marigold acquisition, giving the stock-based compensation packages to the senior leadership of Marigold to make sure that the companies sync properly. So I truly believe that it was elevated again this quarter because of the Marigold acquisition. I don't know that for sure. We don't have clarity on that.
I agree. I agree, Ronnie.
But
I'm just going to exit
sure.
here. I'm going to take this note to exit here. I got to run. I got dinner coming up. But thanks for the call, guys. This was awesome. I don't see anything wrong with it long term. Obviously, still long term Zeta shareholder. So looking forward to next quarter. We got some stuff to announce here shortly, Ronnie. But stay tuned, guys. Lots of cool things coming up.
Yeah.
Yep.
Nice chatting with you.
I'll
bro.
see you guys later. Thanks for having me on, Ronnie.
Yeah, man. Talk to you later.
See ya.
See ya.
All right. David's got a couple more minutes.
I
Close
do.
it out. All right.
Yeah.
So what was I just saying? Yeah, I would go ahead and assume that this was also elevated around the Marigold acquisition or the pay packages to senior leadership. I said it on multiple live streams. I said it to Nick. I said either we have a one and done stock-based compensation elevation, stock-based compensation being elevated for 1 quarter for that to cover the Marigold, or it'll be, 2 quarters. But I really can't see it going past 2 quarters. And you know what kind of confirms that? What kind of confirms that is the fact that they raised their GAAP EPS for the year. Remember, right now, after a 3-cent GAAP EPS print, when analysts thought it was going to be negative 3 cents GAAP EPS, they went ahead and said, nope, actually, we're not going to do 2 to 4 cents of GAAP EPS this year. We're actually going to do 9 to 11 cents of GAAP EPS this year. Why would they literally triple or quadruple the amount of GAAP EPS that they're going to do this year if they didn't expect stock-based compensation to fall off after this quarter?
Yeah, it wouldn't make mathematical sense.
You see what I'm saying? Like, because
No.
right now they're literally dead even. Like, they're 0 cents GAAP EPS. They're not positive. They're break even. So why would you go from 2 to 4 cents GAAP EPS for fiscal year 2026 up to now? What was it? 7 to no? What was it? It was
They went from 2 to 4 to 9 to 11, right?
9 to 11. And again, they keep saying that they have this 2 to 5% buffer.
Mm-hmm. And 9 to 11, they're going to beat that.
Yeah, they're going to raise it again next quarter.
Yep.
Next quarter, they're going to say, "Oh, it's not 9 to 11 cents. It's actually
13,
I don't
14.
know, 12 to 17%." Like, they're going to raise it again next quarter. And then by the end of the year, they're probably closer to 20% or 20 cents GAAP EPS.
They're moving fast.
They're moving so. Did you hear how he was talking about how fast they're moving? I mean, like, when he started talking about it, he started talking fast. He was
Yeah,
like,
no, there's times of passion, definitely. And he was excited to talk about it too. The partnership, what they're doing, the team.
You can't fake that stuff, you know? You can't fake the passion and the excitement around your company. Like, let's not forget, he is the co-founder of this company.
Mm-hmm.
Next to Scully, who was an Apple CEO. Like, I've talked to David multiple times. He loves this company. He loves his team. He loves what they're doing over there. And like, hearing him get excited like that, it makes me really excited because we don't know everything right now. We obviously aren't in the meetings. He just met with Alex Karp. Well, last week.
Yep.
He's met with Alex Karp. What was that part in the earnings, dude? Did you hear it? He literally said Alex Karp walked us into a room with the 2 biggest marketing or something like that. Did you hear that part?
I did. I can't.
Yeah, I don't know
remember
what
the exact wording, but
yeah,
I
I gotta
remember
go
that
back and
segment.
listen to that. but it sounded, I don't know. It sounded big. I have to go back and
Yeah, and the fact that they just partnered with it, talked to the first two, like he said, 100% hit rate. Like they just started. And so they're expanding, their name's getting out there. Like you said earlier, they're partnering with some of the biggest companies on the planet. So it gives them credibility. People are going to look into them. People want to know more about them. It's just, I'm saying, man, that this 2027 is going to be a banger of a year.
yeah.
It already is.
And then you just have Palantir heating back up, and it's
Mhm.
just like it gets that much better. Like Zeta not getting love when Palantir's not getting love, it's like, okay, I get that. But now Palantir's getting love again, and I honestly see Palantir running back up to $200 per share after the quarter that they just did. And then people are going to start sitting there and saying, "Wait, they did a 7-year partnership with who? Wait, it's a $6 billion market cap. Now it's below 6 billion again. Wait, they sat down with 2 clients and they already landed both clients and they have 868 more clients that they can sit down with. Wait, like, oh my God.
I
Oh
think
my God, dude. Like,
David also mentioned about the the ZBI, the business intelligence section. He said that they
yeah,
can't take into accountability any revenue because they can't project it yet. And so
yeah.
it's just there's I keep saying it, but there's so much upside. They're sandbagging so much.
Dude, it's insane. And you know what no one's talking about? Nobody's talking about this right here. You see this ARPU? You understand that? Where's it at? Where's it at? Where's it at? So think about this, right? They have all these different verticals,
Hmm.
emailing, all these different verticals. And basically right now, their clients, their new and old clients are sitting there and they're starting out with 1 and then they're updating to 2 and then eventually they get to 3. You know what I'm saying? And they keep climbing and keep spending more money with Zeta as they keep proving themselves. Well, me and Nick have talked about it many times, but what happens when the business intelligence replaces all these different channels and then it's just one? So it's like, you want our product, it's business intelligence, it's AthenaOS, most likely. Here you go. You can have this AthenaOS complete system, and then it's not just selling, this omni-channel, that omni-channel. It's literally selling this package that is AthenaOS. And it's not going to be priced as it's not going to be priced as one channel, is what I'm getting at. It's not going to be priced as one omni-channel. It's going to be priced as multiple omni-channels all in one. They're going to figure out that price. And then you sit there and then you spin up this revenue even more. Because you literally aren't just selling one by one omni-channels. You're selling a whole system. Like Palantir does with AIP. You know what I mean? Palantir doesn't sell in these different lanes. They sell a product to you and they say, we deliver this return on investment.
Yeah.
This
And
is what we do.
their users are just growing. So
Yeah.
this ARPU is going to go crazy. My computer might die at any time, so sorry if I just disconnect. But yes,
It's all good.
the ARPU is going to go crazy.
Exactly. Exactly, dude.
Yeah.
No one
So
understands that. And that doesn't, and also we're not even talking, and that gets that explodes wallet share.
yeah.
You know what I'm saying? That is what's going to send wallet share just to the moon. Because at that time, it's literally, hey, you can have the email omni-channel, or you can just have this whole system.
Hmm.
And again, people don't understand, they have Palantir as their partner. You know how easy that is to take into a sales call or a sales meeting? Yeah, we partner with Palantir. We partner with OpenAI.
It's incredible.
It's crazy, guys. I'm so bullish. Every time I get more and more bullish on this company after these earnings calls. The stock price, dude, whatever, man. most of you guys know me. I sat there with Oscar for over a year, and it just went up and down all around, and now it's just launching.
That was
Like,
an impressive play on your part. I'll give you that.
appreciate it, dude. But it's just patience, man. It's just like you don't know. Like everybody gets accustomed to like, oh, photonics, and then they buy into photonics and they run like 1,000%. Most people aren't getting the 1,000% move, but like that's not how investing works. Like it's just not. You're not 99% of the time you're not going to get in a stock and then it just starts running to the moon. Just not.
I've had like, you know, my story with Palantir. Started buying at 28,
Yeah.
all the way down to 5, and
Yep.
then I even wrote it from 220 down to 106. Like it happens. It sucks, but if you actually are long term and actually study the company and know what you own, you shouldn't worry about it. And that's why I have so much conviction and practically zero worry about Zeta.
Do you
It's-
want to
it's
be
fun.
do you want to be the person that bought AMD at $2 and sold it at $10, or do you want to be the person that bought AMD at $2 and then trimmed some at $500? That's the game we're playing here, guys. That's the game we're playing. If you want to make 5x, go ahead. If you want to make big money and you want to sit there, find conviction in companies, understand them like the back of your hand, invest in them, dollar cost average into them. Don't go all into them. Don't be an idiot. Oh, there goes Davis. He's gone. He's gone. Don't use the money that you can't afford if the stock goes down. Dollar cost average as you get a great deal on the stock price. If the stock goes lower, dollar cost average into it. Like, find the conviction first, then build out your position, and then wait, and then continue to keep up with the stock. That's it. That's it. It's what people did with AMD. It's what people did with NVIDIA. It's what people did with Palantir. It's what people did with Meta. It's what people like me did with Tesla. I bought Tesla at sub $22. I rode it to $300, $400. You have to find the conviction in the stocks. You have to find that conviction. You have to own that conviction, and you have to be able to sit there and ride the wave. And if you could do that, not get shaked out, not trade your stock in and out and try to perfectly time it, because at the end of the day, if Zeta goes to $100 per share and you look back and say, oh man, I bought it at 22 and I sold it 24 because I thought it was going to go back to 22. What are we doing? What are we doing? Like, that's $2, a $2 difference, and it ran to $100. Do you see how dumb that is? If you're an investor, you got to find the conviction. You got to do it by studying the company. You got to understand it like the back of your hand. You got to be able to look into the numbers and understand, guys. And then you just got a DCA, dollar cost average, and you got to be patient and wait. I got called an idiot up, left, right, and center for being an investor in Tesla sub $22. You're an idiot. All the news agencies were saying this company's trash. It's just a car company, blah, 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 blah. And then Meta. I was buying Meta sub 150, sub 120, sub 100, sub 80, or right around 80. Oh, Meta's dead. Meta's going to zero, blah, blah, blah. Google. Oh, Google's dead. OpenAI, ChatGPT. Oh my gosh, blah, blah, blah. What was the recent? Microsoft. Microsoft's done. SaaS is done. AI is going to eat SaaS, blah, blah, blah. Palantir's done. And then it literally was just at 107. Now it's at 150 some. These aren't times you should be selling your stocks. They're times that you should be having that conviction and doubling down. That's it. That's it. All right. So yeah, let me see if there's any questions in here, and then I'm gonna go because I need to go spend time with the kids and the family before bedtime. Let's see. Any any questions? Oh, I can filter it by questions, I think, on the YouTube, right? Let me see. I swear there was a thing you could like filter it by questions. Oh, there we go. Did Zeta raise the outlook? Yes, they did. Should be able to filter these by questions. That'd be nice. I guess the stock-based compensation was the only thing that wasn't nice. Market probably expected it to start getting lower. Yeah, I mean, I agree. But again, I really, really, truly feel, especially after they raised their GAAP EPS for the entire year, that means they're going to have to do 5 cents or more of GAAP EPS the next 2 quarters. I really feel like the stock-based compensation is going to continue to come down, and this was just another marigold, stock-based compensation to the higher ups. Let's see. What was GAAP EPS? 3 cents. Analysts expected negative 3 cents of GAAP EPS, and they did 3 cents of GAAP EPS. Then I'm wondering why they didn't announce specific names. I'm sure that I don't know. Maybe the ink hasn't dried yet. Yeah, you just don't know. But again, like, okay, they didn't announce specific names, but they literally just said on the call that they sat down with 2 Palantir clients and they landed both. Again, that if they didn't do that, then that's lying, and that's not good. Lawsuits can happen that way. Any idea why the stock price is down at all? Stock ran up. We ran up to 25.35 in after hours. We ran to like almost $25, $25 a key resistance point. There was misinformation about the earnings as soon as they came out. Some brokerages were saying that they missed by 80% on their EPS. I mean, I don't know. Buy the rumor, sell the news, so many different things. But what did the business do? The business crushed. What did Zeta do? They crushed earnings. Absolutely crushed earnings. Do me a favor, guys. If you appreciate these, you appreciate ZEUS Weekly that me and Nick do every single week for most weeks, just do me a favor. Hit that like button. Subscribe so you don't miss any of the ZEUS Weeklies that we do. We have a really big surprise for you guys coming this week. Some more insights into what Zeta is doing. Not going to spoil anything, but we do have some big things coming this week. So make sure you guys subscribe, follow me, Davis, Nick, so on and so forth across X, YouTube, etc. We appreciate it, guys. We appreciate it. A lot of questions of why it's going down, guys. Again, I think it just answered most of that. Was there any announcements? Yeah, they said they landed multiple deals. People should have full position given the price action. Just saw that one. I mean, yeah. I mean, you could. Let's see. Yeah, not a lot of questions. Lots of bigger banks, Morgan Stanley, Goldman Sachs, showing up on the call. You guys noticing that? Yep. Noticed that. Talked about that. They were asking very in-depth questions. They were very intrigued around all of it. So I would be shocked if we didn't get some price target raises coming out today, tomorrow. But at the same time, their price targets are between $27 and $30, and the stock price just isn't there. So typically, they're not really pressed to raise too much if the stock price really isn't there. So I don't know. I don't know. Why do people not like them doing buybacks? I think people are just like, they're doing stock-based compensation, but they're doing buybacks. But again, the stock-based compensation around the Marigold acquisition is purely to make sure that they didn't have to spend more money in capital, because I'm sure they want to use that capital for potential acquisitions. And wink, wink, they literally just restructured that $1 billion to potentially, I think, do an acquisition. Is this woman who always rating neutral to Zeta? Yeah, I don't know. Probably. See, like this. What are y'all smoking? The street estimate was 12 cents on EPS. They beat it by 5 cents. All right, let's go to newer. Oh, here we go. You guys got some questions right now. Any idea on when Zeta will prioritize profit? They're doing it right now, man. They're prioritizing profitability right now. That's why you're seeing them raise from 2 to 4 cents of GAAP EPS for fiscal year 2026 and bumping that up to 9 to 11 cents of GAAP EPS for fiscal year 2026. They know that Wall Street wants them to be GAAP profitable. They know a lot of hedge funds and a lot of institutions cannot buy this company until they report 4 straight quarters of GAAP profitability. They understand that. They're moving in that direction. And I believe this is one. And then I believe they'll do 3 more quarters of GAAP positive EPS in a row to where they get those 4 straight in a row. And then, they can have more institutions and stuff buying in. Did Robinhood glitch because the initial dump? No, I mean they should have known what the thing is. They messed up. They either were trying to report GAAP earnings, GAAP EPS, and they had estimates of non-GAAP EPS. I don't know what they did, but they messed up big. They messed up. Are you planning to buy a bit more with this dip? I bought a couple hundred more shares in after hours when we were down like 7-8%. I was on with you guys, so I couldn't really nab these 21s or anything like that. But yeah, after what I heard, I'm buying more because it's undervalued, and like I don't have to be right today or tomorrow or next week or next month, but I'm fairly positive I'm going to be right on this company. I mean, the numbers are telling me I'm right. So I'll keep following that. Robinhood is suspect. Yeah. Well, some things, I agree. My favorite part of the earnings call. That's a great question. My favorite part of earnings, I'll give you 2. My favorite part of earnings is the fact that they went from 2 to 4 cents of GAAP EPS guidance for fiscal year 2026, and now it's 9 to 11 cents for full year 2026 GAAP EPS. And I think they're probably going to bump that up again next quarter. So that's my favorite part of earnings. And then my favorite part of the call is the fact that David said that they haven't even factored in anything from Palantir or anything from OpenAI in their guidance for this year. So any partnerships, any money that they make with OpenAI or Zeta for this year has not been guided, has not been anything. It'll be just straight gravy on top of whatever they're going to do this year already. And what they're going to do this year already is already immense. You think they didn't announce the new partnership because they want to announce something for Zeta Live? I mean, we're very close to Zeta Live. Like Nick said, very, 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 pretty positive they're going to announce AthenaOS at Zeta Live. And yeah, I think it'd be great for them to have the new partnerships announced at Zeta Live. Especially you have to understand that Zeta Global Live is a big sales event. Like I went last year and there was so many, potential clients there and everything. And I wouldn't say they wine and dine you, but like you're trying to make these sales and people are like, oh, well, why are they spending all this money? Blah, blah, blah. Well, just so you know, David even came out and said it. The amount of money they spent to put on Zeta Global Live pales in comparison to the amount of money that they made. Okay. So if they're putting out X money and they're making way more money, then why are you complaining? Why are you complaining? Okay. So 1, that. 2, if they were to announce these partnerships when all these clients and potential clients are at Zeta Global Live, and there's probably going to be Palantir members there, you're probably more inclined to go with Zeta and make a deal if you hear about all the deals that they're making. So yeah, you could be onto something there. Do you think that was a big reason for the drop? I mean, there's not that much, stuff happening after hours. It's definitely part of it. It's definitely part of it. Is it like the whole reason? I don't know. We'll just have to see where price goes over the rest of this week and next week. That'll be the big teller. Hey, Ronnie, just want to say I appreciate your insights and Zeta and your effort. I appreciate that, man. I appreciate that. I hope the brokerage rectify that negative 80%. Hopefully, man, because that's just ludicrous. Like, you're messing with people's money. You're messing with people's money, okay? Like, someone might see that and then act on that and be like, why would I be in Zeta Global anymore if they just missed by 80% and they've never missed, they've always beat and raised. Or traders, so this is ugly. I want some more, but want to buy on a red day, to be honest. Yeah. I mean, who knows? We could fall back down to 20. Who knows? If that happens, I'll definitely be buying more with you. Do you think Zeta will recover tomorrow? I mean, if we get some price target raises, then I think so. If the dip was mainly because of these brokerages with false information out there, probably, yeah. I appreciate you, Nick, and you guys have changed many people's lives with Zeta, Oscar, and so on. I appreciate that, Wyatt. Appreciate you, man. You're killing it, dude. Keep it up. Keep it up. Why is Zeta not getting respect in the market based on guidance? Should be at a higher market cap. I fully agree, Christopher. I fully agree. I like what Nick said. Eventually, Wall Street's going to have to take notice. Eventually, they're going to have to stop ignoring this name because it's blatant. It's very, very blatant. I just joined. Was there an error? Yeah, a couple of brokerages came out and reported that they missed earnings by like 80%, so on and so forth. And that's just not the case. They didn't miss earnings. They crushed earnings. So that's funny. Oh no, Zeta went from begin 52% position in my portfolio to 51%. Yeah. Brutal. But all right, guys. Super awesome. I just want to thank you all. I'm literally looking at this right now. This is crazy. We almost hit 20,000. Almost hit 20,000 viewers. That is the most viewers that a ZEUS Weekly or any Zeta anything has ever gotten. So it's a new world record for Zeta content on YouTube or X or whatever. Almost 20,000, 19,647 viewers. Insane, guys. Awesome. That just tells me that more and more people are coming around to Zeta. More and more people are understanding what this company is doing and how they're moving forward and what they're trying to do in the AI infrastructure realm, and with them switching from just marketing to business intelligence. And obviously, when you are a sub $6 billion market cap company and you start partnerships with OpenAI and Snowflake and Palantir, these massive companies, and you're just a small guy, people are going to take notice. People are going to take notice. So I appreciate you guys. I hope you got value out of this. I've never been more bullish on Zeta. Make sure you give Davis and Nick a follow as well, and subscribe to them and me over here on YouTube and on X. That way you guys don't miss any of the ZEUS Weeklies we're coming out with, and the big surprise coming out later this week. So we appreciate you guys. Hope you guys have a great and amazing day. God bless. Take it easy. See ya.